Hello, everybody. Welcome back to another episode of the Market Close. Today is Tuesday, September 17th, 3:46 p.m. And we are back once again on another Market Close to analyze what is going on in the world of the global capital equity markets. Today has been a very interesting day. Lots of different angles to how this day is kind of playing out. One could argue today has been a catawampus day. But it has been indeed a very interesting day. We've got some updates I have made in terms of my own portfolio. I'm going to be sharing that today and some of the moves I've made, what I did to de-risk / take profits, which technically aren't really profits because I'm just taking my initial capital out of the trade. So we're going to discuss kind of how I navigated that, why I did that, and what are my perspectives on doing that. Number two, we've got a market that hit all-time highs today. S&P 500 topped out at about 566. Palantir did hit 37.18, I believe, as soon as the market opened. Since then, markets have been kind of flat throughout the day. S&P 500 right here ending at 562, not going to end at that all-time high level. Robinhood topped out at about 2290, right now at 2251. IWM at 218, that was at 220. SOFI was at 825, 814. So markets have kind of chilled out in terms of where they were at around 10 a.m. when they were soaring. And then obviously tomorrow we've got the day of all days. We've got Jay Powell trying to figure out, are we going to do 25? Are we going to do 50? I've got some new analysis on that. We're going to look at a couple other different macro perspectives and try to get to a better conclusion on it. But we're less than 24 hours away at this point. 2 p.m. we will get the answer. And it's going to be a hell of a day. I think it's going to be a volatile day. It could be volatile to the upside or to the downside, but we're going to see what the hell happens tomorrow. It's going to be a big, big day. And then finally, of course, we got Technical Tuesday with Jason. And so he'll be on in about 30 minutes and get your tickers ready. We're going to have a good amount of time to go through as many tickers as we want to go through and kind of see what's going on in the world of all the technical analyses that we have. Okay, so before I get into some of the moves I made today, I want to get a little bit of a macro update and let's listen to what Liz Young has. She has some interesting thoughts today on what's going on in the macro. Again, markets hit all-time highs, kind of cooling off a little bit. Let's get her thoughts and then we'll keep going from there.
Contributor broaden out this conversation. Liz, talk about tomorrow's decision and I guess just to the degree to which we feel like it's going to be a major swing factor in terms of how the economy breaks and how the market adjusts to it.
Well, I think it is going to be a swing factor in the market because there's not certainty about what they're going to do. This is the first meeting in a really, really long time that I think we're going to go into it really not knowing what's about to happen. So that in and of itself is likely to be
someone's going to be disappointed
mover.
Either way.
Someone's going to be disappointed. Yeah. Somebody's
again, the market really doesn't know. We really don't know if it's 25 or 50. Right now, the rankings are still 65-35 for 50 getting the lead, but no one has a clue.
Going to be wrong, and that's a new experience that we're having as investors. So at that period of time, and I say this all the time, that period between 2 o'clock and 2:30 p.m. is the most dangerous time to trade because they've made the rate announcement, but they haven't had the presser yet. So heed the warning that is a dangerous time to be playing with the market. But the decision of between 25 and 50, I think that they should do 50. Mm-hmm. It would be out of character for them to start with 50. It would look big. It would be aggressive, so to speak, based on their history. But if they know that they need to do that at some point, if they know that they need to get to a certain point before the end of the year, why wait? Mm-hmm. And why wait until the day after the election results? Hopefully results actually come out. Why wait until then and be accused of being more political? So I think they should do 50. I think that the labor data has...
Wow. So Liz says 50. Her argument is, hey, we don't want to wait too long. You don't want to do it before the election or right after the election because that's political. So she thinks, and I guess she's about to talk about the labor data, but I did not know Liz was on the 50 camp.
Has disappointed them. It's gotten cooler more quickly than they expected, given that the unemployment rate has already overshot their year-end target. So I think 50 actually would not be that aggressive, especially considering that on the way up, they did 25, 50, and then 3 75s in a row. That was really aggressive. So why not get it started with 50 and manage the messaging?
Yeah, it seems as if, I mean, it's worth remembering that they've been on hold since July of last year. That's 14 months. It's an unusually long period to kind of keep rates at cycle highs. Mm-hmm. And so over that time, I guess it probably, and the reason that the 50 basis point chatter has probably kicked up, whatever, maybe there's leaks, maybe there's people deciding to try and kind of push the debate in one direction or another, is that 5.25 to 5.5 on the Fed funds rate increasingly looks out of whack with all the things you mentioned, right? With the upturn in unemployment, with where inflation has gotten to. And I guess the question is, with the S&P already up 18% this year, you are starting to see, like 60+% of all stocks are now in an uptrend. In other words, it's not as if the market expects bad things from the economy. So we're not priced for a further downturn, it would seem.
Right, which would send the message that the market can absorb it. Now, maybe it would have some jitters initially if the 50 was a surprise to people that were expecting 25. But the market right now seems to me to be priced for a soft landing. We're almost pricing that in. We've got this broadening out going on. You've got small caps outperforming the S&P over the trailing 3 months. The sectors that are leading are either rates-driven sectors, some defensive sectors, but I'd also call those dividend-paying sectors that are trying to anticipate further drops in yields. So the market is telling us that it has resiliency under the surface and the average stock is doing okay. The economy still doing okay right now. I'm of the mind that we're actually just making a stop in balanced territory on our way to weak territory. But right now we're balanced and that's okay. And the market continues to be resilient and there's buying power out there. So that's
basically she's bearish. She is like, hey, we're balanced right now, but we're getting weaker. So she's still bearish. She's just not saying we're going to crash tomorrow. She's going to say we're probably crashing in like 5 months and we're on our way to crash.
Another reason I think the Fed can afford to do 50 tomorrow. And we just have to manage the messaging around it. And that messaging being, just because we did 50 today doesn't mean we have to do 50 every single time from here on out. But the risk of only doing 25 and then having this big gap of time between the September meeting and November 7th and having all this data roll in cooler and them looking too far behind, I think that risk is much higher than just doing 50 and trying to manage the message.
So I think that's a fair point. Essentially, she's saying, hey, if we get crappy data over the next couple months, which one could argue, given the labor market is slowing down, we would get some crappy data. We've already got some crappy data over the past couple of weeks. However, retail sales data was not crappy today. It was plus 0.2, or plus 0.1. The market expected negative 0.2. Last month, it was plus 1. The market expected 0.4. So retail sales data has been so far so good over the past couple months. It was also good in June, but the labor market has been horrible. And not horrible, but like not good, right? Just like definitely not what you want to see in an economy that is not struggling to be in a recession. So that's why, and that leads me to my take right here. I'll talk about my portfolio changes at 4 p.m. after the bell, so I'll get some time to talk about it. But what was really surprising today is seeing the market hit 566.58, which means we were 42 cents away from 567, which would have been incredible. It was quite an accomplishment on a day like this where there was no news outside of retail sales data. Now, look, retail sales data is good. It's not bad. Whereas Palantir right now, Palantir 36.38, so still ending green on the day. But it's not like retail sales data should be what's taking us to new all-time highs. But that's what happened today. Or it's not just retail sales data. It was the market thinking, hey, we're going to get a pretty aggressive cut. And that cut could be 50. Now, the existential question is 50 bullish or bearish? And I just don't think we fully know. Here's what Nick T said from the Wall Street Journal today. Here are his thoughts on how he's thinking about this. The Fed faces a finely balanced set of considerations over whether to cut by 25 or 50 at its meeting that begins today. The case for 50 comes down to what Fed officials call risk management, but what might be thought of as regret minimization. Per former Dallas Fed President Rob Kaplan, if you cut 50 here and you think the Fed will need to cut again after that, you are unlikely to regret such a cut, even if the economy chugs along between now and your next meeting. But if you got 25 and things worsen in the coming weeks, you'll feel a bigger regret as you'll be behind the curve. That's a serious dilemma to be in. And I imagine Jay Powell and his team are trying to figure out, hey, which side of the aisle should we fall on? The case for 25 boils down to some combination of one, process issues, because 50 will signal something more urgent. There's an election soon. Communications were not explicit enough about 50 in the run-up to this meeting. And two, a view that the economy is doing just fine, aka retail sales data, and will continue to do so with more gradual reductions. And three, that because financial conditions are easy, in part because markets expects the Fed to deliver a string of cuts. That's why equities are trading at, 24 times price to earnings on the S&P. Igniting risk assets could make it harder to finish the inflation fight, which would be why you do 25 over 50. I think all three of those arguments are very solid arguments. And today starts the day where Jay Powell and the Fed are going to have to figure out what they're trying to do. One final note, he says, when articles say this is a close call, this can be interpreted to mean that this is a matter of counting votes. And if the people who support 25 outnumber the people who support 50, then that's the way it goes. That's the wrong way to think about this for a few reasons. First, there are likely to be some people who feel more strongly about one but can live with the other, and vice versa. There may be some in between who are people who are legitimately uncertain about what to do, and there may be others with very strong opinions, and a dissent is possible for a cut of neither magnitude. In the current circumstance, a close call doesn't mean 5-4 Supreme Court decision close. It means that there's a lot of uncertainty about what's the right thing to do. In the end, Powell can probably build a reasonable consensus around either, says William English, the former director of the Monetary Affairs Division at the board. And this is important to understand because last time in July, our boy Goolsby, and I think our boy Bostic, but definitely our boy Goolsby, was like, it's time to cut. It's time to cut. And the rest of the Fed members were like, nope. And Goolsby was outnumbered. So I don't think you need to literally have a unanimous decision, but you need to have close to a unanimous decision because at the end of the day, this is monetary policy that affects not only the United States of America, it affects the global economy. So you would imagine the 12 people figuring that out hopefully can come to a consensus on what to do. This one, I don't know if it's going to be unanimous. And it might come down to the wire. J-Pow's going to have to make the decision, dude. It's like giving me goosebumps. And like, this is, I guarantee none of my friends or any of your friends or family members even care that this is happening tomorrow. But tomorrow at 1:59, we are going to have to see. Maybe I'll stream. Usually I start streaming at 2:25 on Fed FOMC days. Maybe we start streaming at 1:59 or 1:55. And we get ready to stream this decision because this is a big one, dude. This is a big one. This is going to affect a lot of the trajectory of the market. But also, as I say this, what if it's a nothing burger? What if it's a slight sell the news, maybe a dramatic sell the news, maybe it's a, gap up and then it sells off and we get back to where we were in the morning? Like, I think there's a lot of different routes this can finish, but at least today, S&P 500 right here at 562, Palantir at 3647. Palantir did get a new deal today with the Nebraska Medicine, which was a great hospital multi-million-year partnership. At least today, the market's saying retail sales data is enough for us to get excited. And that's why we're seeing some momentum. Sam right here says, I bet you the markets are going to rip up because that's just how it goes. We are in a bull market. I agree. There are some people that I was reading today feel like this is a rug pull and this is a massive bull trap. And tomorrow we're going to get rug pulled badly. Bitcoin right here, just below 60,000, but it did hit 61. No, did it hit 61? No, it hit 60,300. Oh, no, we hit 61. Yeah, 61.3 in the morning. I could see the case for a rug pull. It's just that the retail sales data we got today was really good. The jobs data, unemployment claims last Thursday was also really good. CPI was phenomenal at 2.5. I mean, a rug pull would be the Fed, the market expecting 50 so aggressively, and then we don't get 50, and then the market freaks out. That's how I see like a pseudo rug pull happening. But the fact that they are cutting should be bullish, and now it's just a question of, is it going to be 25 or 50? And I think that whole narrative of, oh, it's going to be 50. Tesla lost some of its gains today. It was up 3% right now at 227, up about 0.5%. If we do get 50 and the market's like, oh my God, this is bad, something's breaking, recession, yada, yada, I think that's kind of out the window, at least personally. I don't think the market's that intense about that or that scared about that. I think the market wants 50. We're seeing the future say the market wants 50. So I think hopefully, I think we should get 50. Do I think we're going to get 50? No, I think we're going to get 25, but I think we should get 50 because the labor market is cooling. You want to get ahead of the problem before the problem gets worse. Also, I do not think 50 basis points creates an acceleration in inflation. I don't think that happens. And I think J. Powell's going to have to look himself in the mirror tonight and ask himself, do I think if I cut by 50, that inflation will come back? Because if it does, then like, all right, then you can chill out. Like worst case scenario, CPI reaccelerates. All right, chill out. We're not doing any more cuts. Like we got to handle this inflation thing. We don't want to be like the 1980s. But if it doesn't accelerate and you risk the labor market going to shit, I don't know, dude. I feel like 50 is the better choice. And I think that's what a lot of people said today as well. And so tomorrow we will see how this ends up playing out. Tuesday, September 17th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, there you go. Josh Franklin says, Amit, I spend more time listening to you than my girl. Let's keep it that way. All right, Tesla 227 on the day, ends up about 0.48%. Bitcoin 59,940, up 3.2% on the day. Intel, had a good announcement yesterday. only up 2.6%. So the market kind of sold it off. It was up 11% yesterday after hours. Robinhood opens or closes 2%, 1.94%. Not bad. 22.64. A couple people messaged me. It seems like the picture that they put out today, this like I showed you guys in the morning, this like picture of like, hey, what is this? It seems like they're getting ready to sponsor the Memphis Grizzlies and potentially get the owning rights or the name rights to license the arena. FedEx had a deal. That deal is ending this year. They had a 20-year deal with the Memphis Grizzlies arena. A lot of people kind of compared the pictures and they said, hey, this is the logo of the Memphis Grizzlies. I don't love that. I really don't love us sponsoring an NBA team. I'd rather take that money and give it away to people with the 1% match. NVIDIA right here ends the day down 1%. So I don't love it. I don't hate it. But if they, if they really want to spend 20, 30 million on that, I feel like we could have spent it in a better place. Hopefully it's like a long-term deal. And, maybe that increases top-line brand awareness. So don't hate it, don't love it, but we'll see if that actually is the announcement. Maybe they announced that back in October in the Robinhood Summit. Roku ends the day up about 0.4%. Amazon ends the day 1%. Apple, wow, Apple ended green. It was red for the majority of the day. Now it's up 0.22% on the day. Hims right here ends down 1%. Affirm down about 0.14%. Affirm had some great news with Apple this morning around buy now, pay later. Very bullish for Affirm. CrowdStrike up about 1/3%. Adobe goes down another 1.24%. Palantir, wild day for Palantir. It did fall back into that 35.90 range, but ends the day at 36.47. The highest close for Palantir has been $39. That was on January 27th, 2021. So we got some dollars to go before we have our highest close ever. But the fact that we closed 2 days in a row above 36, I mean, dude, that's not bad. That's really not bad at all. Microsoft increased the dividend and buybacks. They're up 1%. Google up about 1%. Meta up 0.5%. Amazon up 1%. NVIDIA fell today. Tesla was up a little bit. And then Apple was green. Looks like some of that money rotated out of NVIDIA into IWM. Small caps ended the day. Wow, up 1%. No, small caps were up 3%. You can make the case that some people sold off NVIDIA for IWM, but it's not like a dramatic divergence between the two since NVIDIA was down 1%. SOFI as well, 813. Again, see, SOFI was at like 8:30 during the day. During the day at like 10:30 to 11:30, we were like ripping, and then things kind of cooled down. We didn't end red for the day. I think S&P ended a little bit red. No, S&P ended green. Wow, we ended green by 0.05%. So we still ended green, but it wasn't as green as we were in the morning. Okay, cool. So I want to talk about the portfolio changes I made today. I want to walk you guys through this stuff. It is some complex derivative shit that I learned today. We're back to derivative emit. I'm going to try to explain it the best I can. Some of you will be lost. I will try to explain it the best I can. Some of you that are more advanced will understand it. I really learned what the strategy is today. And I'll talk about my reasoning behind the strategy and why I did it. And ultimately the value that I see out of it. And kind of just taking some risk off the table at the end of the day was the core thesis behind it. So first of all, got to give a shout out to my boy, Chris. Chris helped me understand the strategy this morning. I think it was a very, very smart strategy. The only reason, to be honest, I have the gains that I have this year is because of Chris teaching me these call debit spreads that he taught me back in May of 2023. And so I used that strategy on Robinhood stock. The decision I made today was also on Robinhood stock. And this was a strategy that he kind of told me about that limits my upside, but definitely protects against my downside and helps me sleep at night, which is also a very good thing as well. All right. So here's what I did. I purchased in the beginning of the year and then on the dip on August 5th, 1,020 call debit spreads. We're just going to use 1,000. I have 1,020, but I'm just going to use 1,000 to make the numbers easier. 1,000 call debit spreads on Robinhood stock. Now, I started buying these in February when Robinhood was 14. Guess what happened on August 5th? Robinhood went to 14. So the price that I was talking about in the morning, the price that I got on those call options in February, when I was up 150% July 16th, I saw all of that deteriorate in front of my eyes on August 5th. So if you thought you had a crappy August 5th, like one of the biggest winners of the year for me just like was decimated on August 5th, but I still bought the fucking dip because I was like, you know what? Robinhood's not staying at $14 for long. So I bought 1,000 contracts at an average of, it was 49 cents, but I'm just going to use 50 cents to make math easier. 50 cents. Yes, I said 1,000. So if you do the math, 1,000 times 50, that's $50,000. Okay. $50,000 in this Robinhood strategy. I have another Robinhood strategy for 2026. That's not that relevant. This is expiring in 2025. So this makes it more relevant. Okay. So bought the call at $22 strike expiring January 2025, which is coming up. Remember, I did this in February originally, so I had time on this, but now, January is coming up. I sold the $25 call on top of it. Bought the call, sold the call debit spread. 25 minus 22 gives you a width of 3. 3 divided by 0.5 gives you a return of 600%. So theoretically, the idea was, hey, I'm going to buy these at 50 cents. I'm going to sell them at 300. The numbers never work out exactly like that. And I would make 600% return, which means I would take 50,000, turn it into 300,000. And that 50,000 would net me a profit of 250,000 because 300 minus 50 equals 250. That was the goal. The contracts today were worth $1.27, which means call it $1.30. I was up 150% on those contracts. So that 50,000 was up about 75,000, which is good. Good money, makes a lot of sense. I mean, it's good profits. But I kind of want to go for that big 200 grand kind of profit level and see if we can get it. So what I did today, which is what Chris taught me, which was really interesting. And again, it's not really taking profits. It's more so getting my initial capital out of this, is I sold 500 of the $22 calls. Remember, I have 1,000, so sold half the position. And simultaneously, I bought 500 of the $24 calls. So what that does is that creates a spread between 24 and 22, what the call options are worth. Again, closing out the 22s, opening the 25s, same strike, January 2025. And I'm covered by that sold call, which is the $25 call. Whether you're covering it with the 22 or the $24 call, something's covering it, right? It's not a naked call, and that's at the top. What that allowed me to do is recognize a net credit between the 24 and the 22, which for me was 89 cents off of a 49-cent initial investment, so about a 75% gain, and then qualify for another 62 cents of capital appreciation within the new spread that is between $24 and $25. So we sold half of the $22, $25 call debit spreads, but we technically didn't sell them. We sold them and we rolled them into the $24, $25 spreads for about 38 cents, which means if you take 100, the way I get 100 is 25 minus 24 is 1 times 100 shares is $100, minus 38 cents. We now have 500 contracts that are able to qualify for 62 cents of additional premium if Robinhood gets above $25 by January 2025. And then we have 500 contracts that are still able to qualify for a 600% return. If Robinhood was to get to $25, they would qualify for $300 of capital appreciation on the contract. I paid $50 for those contracts, so that would be a 6x return. Simultaneously, I was able to recognize $40,000 of a net credit. So I was able to get $40,000 out of my $50,000 that I put into this position. That means I got a decent amount of my capital back, which means I essentially, pulled out a little bit. And that $40,000 now is in cash. If we get a dip in the market, I can sell some puts on Hood because I think the premiums are amazing when you sell puts on Hood. I would love to own actual Robinhood stock at 16, 17 bucks. And so we'll see if that happens. If that doesn't happen, then I get to have that $40,000 in cash. After you do all of the math, if Robinhood gets to $25 by January 2025, if everything works out the way I want it to work out, again, it's at 22.70. Does it get to 25? Yeah, I think so. But this is that one hedge that, hey, what if shit hits the fan? At least let me get most of my initial capital back. I would be qualified for $206,000 of profit instead of $250,000 of profit. It's actually 208 if you assume everything literally is above 25. So that's $42,000 of additional capital that I'm not able to get. And so for 42 grand, I thought, you know what? I'm about to go to India instead of checking my phone every second while I'm in India. Because while I'm in India, if Robinhood tanks or whatever, and I'm not going to be able to be near the market or my phone, it's just, there's a lot of stress. I've been holding this shit for a long time. I've been holding this since February. I saw all of my gains, all of them on this option, disappear on August 5th. I mean, dude, August 5th, because again, if you have stock, it's like whatever on August 5th, right? It's like, all right, at the end of the day, you think NVIDIA will be around for a couple of years. If you've got options, you've got an expiration date, and that sucker better come back pretty soon because you've got theta working against you, especially if you bought the options, not sold the options. And so I thought it made a lot of sense. And when Chris explained it to me, it was at least getting back my initial capital without getting rid of too much upside. Now, what it does do is instead of being able to qualify for a 600% return, I'm now able to qualify for about a 300% return. So if you take the net premium I got today, which is $89 plus $62 of capital appreciation on the new spread, you add those two together, that's $150. I bought the spread at $50. That was my average. So 50 to 150 is a 300% return. So it's not 50 to 300, which is a 6x return. It's 50 to 150 on 500 out of the 1,000 contracts, which is fine because I get to take most of my initial capital back and I still get to make a 3x on these if Robinhood's above 25 and a 6x on these other options if Robinhood gets above 25. Do I think it gets above 25? Yes. If it doesn't, at least we are protected with a little bit of that initial capital. So there you go. That's what we got. And that's the move that I did today. I know that might be a little complicated. I was on the phone with Chris for an hour. I was like really trying to understand it, but hopefully that broke it down a little bit. Maybe I'll write up a tweet and like really break it down so people can see it there. But essentially what I did is, to make it very simple, I took out most of my initial capital out of the position, and the position has an ability to still generate most of the profits that I wanted it to generate outside of 42,000, which is okay. Now here's the kicker. What I also figured out is, and I talked about this a couple of weeks ago, I have not started my own solo 401k. I have my own LLC. I'm a self-employed. I can contribute up to $66,000 and write that off as a deduction from my income if I open a solo 401k. And so now I actually have the cash to be able to contribute to that solo 401k. So technically, like some people are saying, oh, well, you're gonna have to pay short-term capital gain tax on the 40 grand. Yeah, but if I can just put that into my 401k and write that off the business, I'm sure there's still some taxes involved, but at least that helps. And then I can use that money in that solo 401k and, not sell it for decades and just have that compound. So that was the logic behind the decision. I'm giving up 40 grand of potential profits I could make, but I'm recognizing $40,000 today, which is 80% of the initial capital that I put in. It makes me sleep better at night. If Robinhood were to tank somehow to 17, 18, I would just be able to buy that dip instead of getting super scared that my entire position is gone. And if Robinhood gets above 25, we'll make 200 grand in profit, which is not bad. So there you go. That's what we did today. That was the move. And that's why we did it. Thomas says, I think it's smart for you to do that. No one truly knows what's going to happen tomorrow, a week from now, or a month from now. Yeah. And, I did feel uneasy today about the frothiness in the market. And the reason I felt uneasy is because I don't think retail sales data was enough for us to hit all-time highs today. Like, that felt weird. That felt like people knew the Fed is going to do 50. And if somehow the Fed doesn't do 50, is that a sell-off? Now, yeah, that could have a sell-off and then we could recover after the election. But again, does the market really like Trump? Does the market really like Kamala? Are we going to get the next jobs report that signals? Like, I'm still very bullish. I just needed to take some risk off the table, which is my initial capital, because it's like, dude, if shit hits the fan, like at least there has to be some risk mitigation here. And the final thing that did it for me, a lot of you guys remember the early days of the channel. I was up 30 grand on SOFI options. And the whole idea was like, oh, well, this is going to turn into 150 grand. So let me just leave it. That turned into $1,000 of profit because I got greedy. And so the biggest thing I kept reminding myself today is, look, you took a big risk at 26 years old this year. You put in some real money that you worked your ass off to be able to get. Don't get greedy. Like, just don't get fucking greedy. Getting greedy is always the way that most of this shit ends up going to crap. So there we go. That's the move that we made today. All right, let's get into Technical Tuesday. We are back. I have missed this segment. It's been a week, but we've got to go through some tickers. Put in the chat the tickers you want to go through. I know one ticker that we've got to start off with, and it starts with a P and it ends with an R. Ladies and gentlemen, paper gains. Jason is back.
What? Dude, where's my transition?
Oh, shit.
Okay, rewind. Do it.
I don't even have it loaded into StreamYard.
Oh, don't worry about it. I missed you, though, man. For sure, I missed you. It's been a while, right? It's been, we missed last week. Was it 2 weeks?
We were there the week before, but we had to end it kind of rushed because we had the Twitter Spaces.
Oh, yeah.
Today we got 3 hours, however long it takes to just do what we need to do. Before we get started, let me put Jason's Twitter in the description. For those that don't know him, for those that are new to my channel, I know we got a bunch of new people on the channel. This is the guy that I hit up when I'm curious about something technical. Also, when I'm curious about why he hasn't watched Dawson's Creek, and I grilled him.
No, I'm not. You're not gonna get me on that one. You got me. You got me on Prison Break. Dawson's Creek. No.
Was I wrong on Prison Break? Was I wrong? Was I?
You weren't. You weren't wrong on Prison Break. I still can't understand like how you blew through the entire series that fast, but it's all good. But I don't regret watching it. That's for sure. So
that's Jason's Twitter. You can check out all of his stuff in his description. And yeah, let's get into it. Jason, I guess some quick macro thoughts, and then we'll get into the tickers. What the hell do you think is going to happen tomorrow?
Oh, dude. Well, so when I look at like the CBOE FedWatch tool, things like that. You know, I've been in the 25 basis point camp for a while. I don't know that the Fed has really click the compare button on that really quick. So on the top left of the screen, underneath current, click compare. So right there, what this is doing, as an aside, this is a mid screen, is it showing you where we've been from the market pricing in a certain amount of rate cuts. And you can see that it's slowly shifted to, if you hover over that dark blue bar on the far left, it's 65% right now. So if you go back a week ago, that was more, well, actually it'll tell you exactly. So it's like the third one over. If you go back a week ago, right there, it was 34%. So in the last week, we've gone from 34% probability, or price probability in this sense means that this is what's priced into the market right now, to a 65% probability.
Why do you think it doubled in a week?
So that's where, so I think it was CPI. That's what I think, right? So CPI, to be fair, and we talked about this recently, right? When I came out, I said, look, you know, I think we're going to land in this Goldilocks zone that, you know, is literally, it's the definition of like Goldilocks. And if you don't know, when I say Goldilocks, just as an aside, there are four kind of macro setups to the market, right? So there's disinflationary, there's stagflation, there's reflation, and then there's Goldilocks, right? And so when I look at that, actually, can I I'm going to pull up something really quick. Here, can you share my screen real quick?
Yeah, you guys can put your tickers in the chat. I'm getting all the tickers. We're going to try to run through as many of them as we can in just a bit.
So these are, Goldilocks, disinflation, reflation, and stagflation. Essentially the four basic situations that the macro can really be in. And so this is GDP and essentially the ratio of GDP to inflation. And the definition of Goldilocks is 2% GDP and 2% inflation. Where we landed last week on the headline CPI was actually 2.5, not on core, to be fair, but we landed 2.5 on the headline CPI. And at the same time, GDP, the last forecast is sitting at 3%. So this is kind of where we are. If our rates are sitting at 5.25, and yet our headline CPI, headline inflation is 2.5, that's very restrictive, actually.
That's tight, bro.
It's very restrictive. So neutral, just so you guys know what neutral is in terms of the Fed funds rate. Neutral is the Fed funds rate equivalent to inflation. So if neutral is 2.5, but we're sitting at 5.25, I think that the market's really starting to front run that. Whether or not that's true, I don't know. I will say that this is a funky situation, pretty much because we're coming out of COVID. I think it is a once in a lifetime kind of situation. But we are still, like, to the other point, and this is what kind of concerns me, is we see things like retail sales hitting, like, you know, way above expectations. So what gives me a little bit of cause for concern is, like, if the Fed does cut rates, right? Like, does that spur spending at the consumer level? And just so you guys know, inflation is not about how much money the Fed prints, right? Like, that's a huge misconception that actually really doesn't have much at all to do with how inflation works, right? I mean, it has to do with its supply, but inflation is all about the velocity of money. Let's say if Amit had if Amit sold widgets, right, and he sold widgets for $100, but nobody was buying his widgets. Even if everybody gets $10,000 stimulus checks, $10,000 stimulus checks, but still nobody's buying Amit's widgets, he's going to lower his prices. Yep. Right? Does that make sense? So it's about the velocity of money. On the other hand, if there's no stimulus checks, but everybody's making money, and the demand for his widgets are going through the roof, what's Amit likely to do? He's likely to raise the price of his widgets, regardless.
Which is what all these companies did in 2021, and now Target is lowering, McDonald's lowering the price because they're like, consumers aren't willing to pay for it anymore. Right.
So that's kind of the question. Does it really spur like another phase of inflation? I don't know, right? But at the same time, you look at what the difference between core and headline. I think the majority of inflation today is coming from housing, right? And so where the Fed does have some room, like they can lower rates, and that could potentially help the housing market, potentially. So the question is, does it? Because the housing market it's been held up because of supply, right? And so supply is very low. Raising even half a basis, even 50 basis points, that's the thing. Does that really even change that dynamic? Are people more apt to sell? Is there more supply that comes into the market, or is it not enough to spur anyone into buying, right? Or selling rather. So I think we're kind of in a rock and a hard place. I think regardless of what happens, it's probably, look, all-time highs are not bearish, right? All-time highs are not bearish. That's all I can say.
This chart is definitely not too bearish.
This chart is not bearish, right? We had
so let's get into it. Let's start with TA on Palantir. We haven't talked since S&P 500. We're officially in. We blasted past that. Give me your raw thoughts on Palantir.
This is our chart, right? So this is the chart that we've worked on since we first did anything, and we talked about this double top of death right here. And actually, when we got to this big pullback, we talked about here's kind of like that retest, right into here. So this supply here we call this supply where buyers are apt to buy. Absolutely holds. And what you want to see is essentially that level going higher, right? We talked about 2750. This is like 2730, give or take. And the biggest thing was in this 3177 level, we talked about this volume shelf right here, volume gap rather. And so when we first met, I was like, look, if we get over this, then we go boom, straight to this quickly. Actually, I can move this slightly over. And this is about where we are. So now what I'll say is this area, and I'm not going to use these big wicks, but I'll just move this area. That's like 3960, assuming that you can hold over. And so that's 3613. We haven't, since Palantir has gotten over this is the first open and close, or just open. It's close over, what is that? 3613, right? Is my level. 3613 open and close. If you get a dip, I think that's fine. But if you look at this small little area right in here, so this from this, essentially this candle, I think this becomes, and we'll put this, I don't know that, 40 is a big number.
40 is a psychological number, but so is 35.
It's a big psychological number. Quite frankly, at this point, it's like, how does it not try to get to 40? Whether or not that's justified, hey man, I don't know. But it's over here, and I'm gonna go ahead and grab this wick. So this area, 35 down to 33, becomes really like that next demand zone. And when I say demand zone, did I say demand before?
You mean like a buy the dip zone?
Yeah, where you want to see Palantir really hold, right? So stocks are either resting or running. What's true right now is that Palantir is running, right? And so as an example, like when Palantir was here, right? Like when it was inside this area, this is a rest period. It broke through, right? And it rested and it retested essentially that double top of death, that 29 level. It broke through and now it's running. You can let it run, and maybe it runs through here. Let's go ahead and do, I didn't do. Let me go ahead and do a measured move. So from here, this last consolidation, I can get rid of this.
That was what, 27, that last consolidation?
Yeah, so this last consolidation area, we're going to call it right in here. What I'm going to do is I'm going to take a fib. Since we're kind of more or less in uncharted territories, what you have to do is you have to use extensions. And so a full extension. So today we are 100% of an extension. So what that means is if this is that consolidation area right here, I'm just going to duplicate that. And I set that box right on top, 100% extension. So we've gone and fully extended 100% of this last consolidation area. You can go up to 150%. And that puts you really like right into here on this like full blown extension. And that is, really close. So that's 39, like just over 39.
Well, let me ask you this question. Obviously,
as a measured move, right? And so as long as it holds, so you want to see to make this work, right? You have to see Palantir hold over here. And that actually lines up to 35 and a quarter. It's about 35.20.
So obviously valuations have gotten stretched a bit. We had Carp sell 4.5 million shares today. You're getting some insiders that are starting to sell. I'll actually check right now if we had more sells. Is valuation, given when we're in uncharted territories, literally not matter anymore? Now it's just about if the momentum can continue.
Yeah, that's exactly right. Right. So like there's two different types of traders. There's technical traders and there's fundamental traders. Fundamentalists are like, okay, well, I want to find something that's undervalued more or less from like a fundamental perspective, market cap, forward PE, et cetera. But you know, to me, the fundamental story tells me what to buy. Ideally, those situations I really liked when they're in like a turnaround story. So if you can find a company that's really turning around, like turning the corner, like it might sound weird, like a 3M though, is like a full-blown turnaround story. It's similar to how GE was at like $40 a couple years ago. And here it is 160 post splits. You're like, you know, 300%, 400% up in the last 2 years. Or more actually, like way more. So this, I think, is a different type of story. It is a momentum story, right? And what's the forward P on Palantir right now? Is it like 40s?
110, something like that.
Dude,
that's what the valuation's getting up there.
Look, you know, you said it the other day. It's really like, hey, look, it's expensive. There's no question about it.
Yeah.
Whether or not it can grow into that valuation is a different story. And you know, until they prove otherwise, this is the classic case of this is a risk on market, right? So, I mean, just the fact that Palantir is doing what it's doing, you really can't say that it's a risk off market, even though we've seen some things like Staples and stuff like that. There's still a solid appetite for risk right now.
I mean, if Carp was able to sell 4.5 million shares and that was gobbled up, it's no one cares. There's liquidity.
Yeah. Yeah. I mean, you're getting that, like you're at this level. So I think, you know, what'd be funny, I really don't normally do this, but let's say this full cup and handle actually goes through. So from this consolidation, from this high to that low, an extension of this area actually brings us same spot,
39,
right into that $40 level. So these are those extensions. If this
is 40 by the end of the year would be freaking wild.
I mean, that's not to by the end of the year is maybe stretching it. So this is 1-to-1 is 50, right? And so 50% of this consolidation lands you basically at 40.
Well, what would the timeline be on that?
Timeline is, so how this works is actually, okay, so this is really what's the word I'm looking for? Like this is ultra prognostication. So what you do is you take the length of the consolidation.
This is us dreaming, but dreams come true sometimes. Okay.
Yeah.
That's what we're doing.
And so you take the length of the consolidation, and from the breakout, this is up to
45. 50.
I don't even know how far this goes.
52. That's 52, I think. Holy
yeah.
fuck,
Anyways,
dude.
it's 1,000-day consolidation. So call it like 3.5 years, something like that. But hey, 3.5 years, you know, I think that's not horrible, quite frankly. But yeah, you gotta be
that's not horrible. If Palantir in the next 3.5 years is 53, I know some people will get upset, but I mean they would be doing $6.5 billion in revenue.
My chart doesn't. This is like 2027's.
All right, so 2027, the stock's 50. I think that's given how much we've pulled forward this year. If we stay at this 36 level, I don't think that's unreasonable. That allows us to healthily grow into that valuation.
This is like the definition of chart astrology, though. Let's be fair, right? But this is how that works if you were to do it that way. So if you're looking at it at like some very broad perspective, it's a measure move, but you got to give it to May 2027 to get to $52.
See, the irony is because there's so much hype around Palantir, if they did put up the numbers that justified, $50, I think there would get a premium on top of that. And, it might.
I think, isn't that Dan Niles' target? Something like that too? In the 50s?
He doesn't cover Palantir. He doesn't. Oh, no, Dan Ives. Dan Ives and Bank of America, both on 50s. Yeah.
Yeah. So there you go. I mean, that's how you could technically get it.
Yeah. Okay, so one thing, I want to move on to another stock. This is a stock that I was concerned might not do what they said they were going to do, And now they're doing it. Tesla, we have 1010 confirmed. So
Dude,
tell me
1010 was
tell me
always-
something bullish about this chart.
Did you sign up?
No, I
Don't
can't.
know.
I can't go there. I'm not.
You can sign up now. But
But
anyways,
like to get a ticket to the event. You can sign up?
yeah. Tesla.
I mean, dude,
Tesla.
if they randomly invite me, that would be awesome. Well, wait, no, I'm going to be in India. There's no way I can go.
No, well,
You should sign up because if you could go, that would.
hey, look, you can sign up. You just, sign up. Boom. There
At
it
least
is.
It's happening, dude. That's all I care about. It's fucking happening.
Yeah.
Gary
So
Love happened.
whether or not I got his invite, it's a different story. But so this is where we are on Tesla. I think the hype is there, but I'm going to be cautiously optimistic. I have two different types of trades on this. The last time that you and I looked at Tesla together, volatility, which I'm an options trader, I'm a spread trader. My focus is knowing like volatility and when things are overpriced, underpriced, and finding those situations where I can make a small bet and get a larger payoff. That makes sense. And I will say that Tesla is not that case today. So everything on the Tesla option series, when I say series, expiration dates out through November are juiced right now. They're pretty expensive. IV
That's because
percentile.
Tesla ran from 200 to 230. That's why it's juiced.
No, I think it's event volatility being,
Okay,
being
right.
So when they say event volatility, so you have two things. So one, you have earnings coming October 16th, and then you have 1010, right? So between the two events, everything through the entire month of November is pretty expensive. It's not until you get to December that things start to cool off. So I actually have like a December, November, what we call time spread or calendar spread on. And then in the near term, I have like a multi-leg trade on called the butterfly that is targeting really this area right in here. But I'm selling two upside calls and buying one near strike call. Does that make sense?
Yeah.
So this is where we're at. This 235 level right here. This is what's really kind of causing us a little bit of like stutter right now. I don't think it's the biggest thing. But again, prevailing downtrend so far is broken and holding. It's not able to get over that 233 just yet. I think that this can take a little bit more of consolidation. And so if I do, I think this is the box that Tesla sits in for a little bit. This is right into here. So 218s, give or take, this little volume shelf right here, this guy, I think is the next area. If you get a shot to take a stab at this long, I really like that. Really, any higher lows in this area should be what is the next dip. And I think at that point, you can really start loading some stuff, both short and long dated if you want, because that way, as long as there's momentum to the upside, even buying expensive contracts, it's not horrible, to be fair, as long as momentum is going in your favor. The problem I have right now is that Tesla is stuck. So it's stuck right here at this 235, 234 type level.
Yeah.
And so I don't want to be net long, like massive amounts of calls while it's battling with this area. But what I will say is that we have this little saying in trading, take it for a grain of salt. There's no such thing as a triple top. And
Yeah,
so this
why is that? Why is that true?
It's not true. It's just the saying. But certain levels take, like, you have to, it's like the door, right? Like if you're trying to knock down a door, right, and you got a battering ram behind you, it's going to take a couple shots before you actually get through. And usually it's on the fourth shot, right? And so the reason it's a thing is, like, if you have 3 shots, right, like what this turns out to look like, it's just like, it's a whole different pattern. It's your cup and handle. It's like this. Sorry for my arts and crafts there, but it ends up being a W. No triple top is like, so you have your up 1, 2, 3, right? That's a breakout.
That's what the S&P did today as well. With
yeah. So this little squiggle that I just made is that's the picture perfect breakout, and that's why it's like 1, 2, 3 times. You go for it a 4th time, that's usually where you break through. So 1, 2, 3. I think we could look at Meta too. It's very similar, but let's say this pulls down a little bit If it makes a higher low, which would be somewhere around just around 220s, give or take, and start to head back up, that moment that it starts to head back up through, I think that's the one that's going to go. So it's maybe not this one, but the next one. And I'm looking higher. So higher than here for the next one, which is 270, 280s.
But that's all on the buy up for the hype of 1010, basically.
1010 into earnings, all of that, right? Whether or not that extends through, we don't know. But what's true, so we have this consolidation, we're holding well above it. If we can defend right here and we start to make another go, ideally this breaks out, and it should, I say should with a big, air quotes, break through. And this next move should not stop here. Because accumulation, so the buyers have accumulated here, that took us to here. Now they're accumulating all in this area, and it should take us one more leg yet higher into that 270, into this area. And here's the big one, right? So there's a crazy, we say session gap. I think this is from earnings. So I'm just going to say, we're going to put this here. This is 289.52. I don't know if that really fully gets filled.
That's July 2023, right?
Mm-hmm.
Yep.
But look, if it traded there, it's valid. So it's an overnight session gap, but this is definitively at least a fair value gap. And so this is maximum where I'd be looking somewhere in this kind of order block, but just slightly outside of that. Honestly, I'll be out of this before it's 280 as a trade from a trading perspective, or at least out of, like you're talking about your Robinhood thing. By the way, dude, you gotta call me on that stuff, man. That's my sauce, right? But it's the same kind of thing. We scale, and quite frankly, I take principal out as soon as possible.
See, this is the thing, dude. I could have taken principal out for the past year, and I haven't. And so today, when it surged, I was like, "Fuck it, I'm taking my principal out."
Yeah, no, that's fine. Like you. Here's the difference, right? As you evolve as an investor and a trader, what's notable for that kind of mental change that I can tell you, in an evolution of a trader and the evolution of an investor, you went from thinking about how much you could make to thinking about preserving profits and principal.
Yep.
That's the biggest switch that you can flip, right? Like being a great trader has nothing to do, like you can be a great technician, but quite frankly, that has nothing to do with how much money you're going to make in the market. There's only one skill set that's going to define how much money you make in the market. And that's your ability to manage a bankroll and manage profits and just your money management skills in general, regardless of how good of a technician, trader, et cetera, you are. The only thing that matters at the end of the day is your ability to manage money. And that's true. Right. And
I know you're very good at that. You described it with Apple calls, Tesla calls. Like you take out your principal pretty quick, and then because I've been there right way too many times, right? Like we've seen it all happen. And honestly, like there are so many things to trade in the market at any given time. Like there's always another trade for me, so it doesn't bother me that much. Yeah.
But anyways, so this is where we are. If you see Tesla, I think if we get one more dip in that like just slightly below 220s, I think that's my hammer buy button. But if in the meantime, if we don't, and it does finally get a daily close over, let's say 235. So what we would be looking for is a net new candle that's kind of like a Palantir candle, right? But like a net new candle that looks kind of like this, right? But like firmly above this line. And so until then, we don't really have it. But we want to see this kind of candle. The day that you have a candle like that, that's the day you're like, all right, it's on, right? And so until then, it's kind of like, let's snipe some lows, if that makes sense. Maybe this is tomorrow. Maybe this is next week. But until we get this candle, that's the candle that we need to see.
All right, let's do our good friend Robinhood.
Yeah, so you got all right. So Robinhood, I actually have some calls that you sold, but like you today, I took my principal out actually. So I bought you're short the Jan 25s. I'm long the Jan 25s. I bought the Jan 25s right here, right? So in here. And then today I took my principal out, and it's sorry for all these lines. I'm going to take these things out. So this right here is very similar to what we did on Palantir. So it's taking this consolidation area. Sorry. And kind of like layering it right on top. Oh my God. Control. There it is. So right on top right here. So today my calls were a double, right? So when I double my money, that's usually the moment that I do take my principal out. It's been a nice move right here. We're about 50% of this prior consolidation. 24.45 is my like primary full target. And at that point, I'll likely be out probably 80%, maybe 90, and maybe be looking to roll up and out. So like how you closed your January calls, you didn't close them. What you did is
and bought the 24.
Yeah, you rolled up your low strike, right? Your lower strike.
My long strike.
For me, what I would have done probably is I would have closed the entire thing and taken the profit and put it into the longer dated ones.
I was thinking of that as well. That was another strategy I was thinking of.
Just because on the spread that you have, you want to kind of treat that almost like a credit spread, if that makes sense, because it's $1 wide. You have $37. You technically have more to gain than you do to lose, but it's that's going to be a slow grind, man, for sure. That's going to be a super slow grind.
It's a difference of $25 I'm making per contract, which is not a big difference.
Yeah. But
so close the position as well.
Yeah. A lot of times what we do is exactly what we just talked about, like take down. So I'll have multiple expirations, and the shorter dated ones might be a little bit closer to the money, the longer dated ones. And they all technically start the same size in a dollar allocation. If this makes sense. We call this a ladder, right? So it's called a ladder. And you have, let's say you have strikes, you're buying this strike here. Let's say you buy, I don't know, whatever call, right? And then you take another, and then you have another call for over here. And then you have a call for over here. As this gets in the money, you take this down, essentially, full.
Right.
And now you're writing this, but this is now almost doubled in value. And this right here has paid for the entirety of this.
Yes.
By the time you get here, you take that down. This is all principal or all profit and then some.
But those three ladders you would set up on the same day, not like, you would set those up at the same time, or you would, because
you can set them up at the same time. So that's one way to do it, right? And then the other way is like if you had them, because
if you set them up the day you close the other one, it's not going to be up double because it's obviously
if you right. So if you set them up the day you close them, it's different. But if you start here, right, and then you close and then reopen to there, and then close and then reopen to there, when you do that, we call that rolling. So the difference between rolling and opening a full ladder at once is that like your net dollar allocation is obviously more when you do the ladder, but you have to be very bullish. And when you do the roll, every time it's just like selling contracts. Every time you make a roll, you want to be putting money into your pocket.
Yes,
every single time.
Credit.
Yeah. That's the tricky thing, I think, for a lot of traders, is that when they get something like this and they're like, oh, it's going, they take their entire amount and they put it into this one over here,
right,
without taking any profits at all. And then it comes down and does that. And then this is worth like, way less. Then they get crushed and they're like, oh, I had so much money, it goes away. So you don't do that. The thing is, every time you make an adjustment or you roll, you have to put money in your pocket. Otherwise you're increasing your risk. And that's not what we want to do.
Do you think this thing can hit 30 this year?
I mean, it's 20 billion right now. I think
with 5 in cash.
I'm excited, right? So like, I'm excited for the Legend Awakens or whatever it is. I'm really hoping I get a beta license. I don't have one yet. I know he's giving them out. I know people that have it. Do you have a beta license yet?
I don't have a beta. No, I don't have it.
All right. Well, I might like grab somebody and force them to like screen share and let me take over for a little bit to play with it. I really want one. We'll see. Wolf and Evan are interviewing him.
I know.
think
I know.
next week,
I know.
or they're down there right now at Future Proof. So that's interesting for sure.
Do you think if they have a good earnings and a good event, do the technicals line up for $30? As I'm seeing some people say.
Oh yeah, they always have. Right. That's the thing.
Gotcha.
They always have. And this is just a daily. Right. Here's the thing. If you're bearish. So there's this funny thing about technicals is that if I don't know if you've ever seen this, if you see like a bearish formation, because if you wanted to be bear, you could be like, oh, this is the right shoulder of a Head and Shoulders, right? But the most, and this is also why, right here at this, where price broke down previously right here at 22.75. That's why, because you're a good bull, you have to know where the bears are waiting and hibernating. They're waiting right here. So you got to take some profit, or it's ideal to, if you're trading. If this doesn't work out for the bears, when you have a bearish setup that fails to follow through, it's like the most bullish thing that can happen in the market. And so it's a funny thing about technicals. If people start loading shorts here and it doesn't come down, it's going to create a short squeeze.
By the way, the short float fell 36%.
Yeah, I don't think anybody's short here. You look at this on a longer term time frame. Honestly, this doesn't really look that bearish. It looks more like Palantir type setup. But I have like 33s to be fair. 27s is just near term, but
that was my logic on selling some today and taking the initial capital. I really do,
because this is the exact spot where it broke down last time.
1000%. And I'm not as good as charts as you, but I've been staring at these charts for 8 months, and it felt like I could just feel, I see what's happening again.
Yeah. So what he's talking about, right? So when it's for anybody looking at this, right? So we had this prior low that was acting as a base right here. And it was resistance, all of this into resistance. Yep. And so, people were selling. They covered here because it didn't break down. It popped. We got some news, but it's 22. I think it was like 22.75, but really it's this morning when you had this like little pop up and then insta sell off.
Yep.
That Amit was, had some cold sweat nightmares going on. This is recent, huh? Oh yeah.
Yeah, because also, dude, before the August 5th sell-off, it was stuck at 22.50 for a good month. Yeah. Like we could get zero. Yeah, there you go, right there.
Yeah.
And so I don't know what the hell happens with JPOW tomorrow, but it just felt like there was an opportunity today to have liquidity from the market, and you could.
Yeah. And so this is another thing why I'm not like immediately rolling up either. So I take my principle out. So here's on Robinhood, if we get something like this, right, and we bounce and we hold in that 21.50. I'm going to take some of my principal and profits, and I'm probably going to reload a net new trade into your long dated call options.
Right.
Something like that. And so like, I wouldn't say this is what we call like a new money long. Like this isn't the best risk to reward for new money longs, but if you get a pullback for whatever reason tomorrow or whenever, and it's around that 21 to 21.50 area, and you see it lock a higher low over this level, right? Because let's be fair, it's this. So this area right in here, if you see it pulling back and defending this area, somewhere around here is where you want to be like looking to possibly, that's a better risk reward new money long spot than it is right here. Otherwise, to know that we're in the clear, we need, similar to Tesla, we need that net new candle that's all the way over like that.
Right.
And we don't really have it yet. We might. I'm excited about, but hey, look, if we get futures trading in the new Robinhood app, I'm just telling you right now, that's going to be like whole next level. And if we get like high-end option stuff, things where I can actually use it, that's another massive piece. Like to me, the 1% stuff is not going to do it, right? Because I need the speed of execution. I need the tight spreads. I need advanced orders and all that kind of stuff. That's not what Robinhood does yet. But if they can get there, and Vlad really wants to take over the active trader market, those are the things that he needs. He doesn't need the 1% match for us, for the active traders.
Yeah.
It's not going to do it for us, right? What we need is speed of execution. We need the advanced option tools, futures. That's big market penetration type stuff.
How much do you pay right now for filling on your contracts, like fees?
So in TOS, I think it's like 35 cents standard. You can ping them and they'll drop it down for you if you want. You like 25 cents, something like stuff like that. But you'd rather pay that 25 cents to get all day long. So as an option trader, the biggest cost to me is this bid-ask spread. 100%. That's the biggest cost. 100%. 65 cents. Sorry. So I
well, 65 for Schwab.
65 cents.
65 for Schwab, I know, but
yeah, I'm less than that, but I think you can ask them and negotiate too.
Okay. Can we pull up NVDA?
Yeah. So we were just,
and then after NVIDIA, we'll get into all the other tickers you guys have here in the chat.
So NVIDIA, so to be fair, NVIDIA is just completely in consolidation mode. I think that this could be in consolidation mode for quite a while. And when I say consolidation, we're going to draw what we call like a pennant or a flag, right? So just kind of like tagging these recent lows and just kind of connecting them. Does this make sense? This red line is that 1, 2, 3. We talked about it multiple times. I can take this down. I don't know what this is here for. It's probably stuff that I've moved it. But I think that we're in this general consolidation. I'm gonna take that off because that actually hit. So I already went long NVIDIA down here recently, and then have since covered. So this was based off this lows in here, right? So this was that last area where people were kind of accumulating. I wanted to see that act like accumulation again, and it got tested one more time. Snipe this. You get up here, and then this is that broader uptrend, reclaim, bounce, boom. You get a big shot to the upside, but it's a lower high so far, right? So what you want to see is you really want to see another higher low appear, and then what's true is that we are still firmly in consolidation. I'm going to do one more line for you guys, and it's going to be off of this earnings right here. So this is the last May earnings. And so this is just under 115. And you can see like this is where prices acted pretty strong a couple times here, and a few here. We could do it reverse, right? So we know that this is a pretty important level of interest. We'll call it price of interest, if you will, in multiple situations, right? And so right now it's retested this a couple times, and you can see it here on this volume profile. It goes down to just about just under 114, just barely. Right in here. So that's this little peak. So when you're trading, one thing that you can use as a tool, this is called the visible range volume profile. What we do is we trade what's called peak to peak, right? And so if this was a mountain range, right? Like you go from the peaks of the mountain to the next peak. And so that last peak was down here. That's why this was kind of like a long spot to go along right in here.
Which is what, 105 basically?
Yep. Yeah. And so now you're coming back and you got to your target, this other peak right here. You didn't go through, which is fine. But now it's coming back and retesting this peak. So what you want to see is you want to see NVIDIA really start to hold. This is about 113.50 and the low end of this volume shelf. And as long as it can hold here, that's better. If it can't, what's going to happen is that you're going to have to fill in this volume shelf slightly. And you see this area right here where we got this big explosion high. So the only thing that was a bit of a cause for concern is this is called a fair value gap, is when price moves explosively through an area that doesn't, and there's not really a lot of time for a lot of traders to do much, right? So if I look at zooming in on this volume profile, see how this changed? And there's a big area from 114.50 pretty much down to 108. It's a big valley in that mountain range. Right. So this is a like low volume pocket. So if it does get below like 115.50, you'll see it kind of breach, come back up and retest, but not quite get over. That's probably going to create a decent like pullback, which would fill that low volume pocket and likely be your next buying opportunity if you're into this consolidation, right? And so from there, it's still like heavy consolidation. To be fair, I don't know. This is not ready to break out, but it has to be like, it would probably look like that, and that would come up into here. And I think that we would consolidate a little bit more until we're finally ready to go somewhere.
Was there a technical reason last week it reversed? Or that was Jensen just being nice about AI?
I mean, I bought it off technicals last week, literally right here.
Because that was a hell of a reversal, right? Like that was
it was, yeah. And I think, you know, if I turn on like moving averages, I thought this might line up a little bit more. You know, it's kind of like levels, like where are buyers and sellers at? And this morning though, here's the look this morning. So if I'm put on my simple moving averages, the gray line is the 20, the blue line is the 50-day. You know, this morning, it almost looked like breakout mode, right? It was really close. And this is this morning's chart. And as you're just barely breaching through, the problem is that it was a quick, see this level, right? So that's 118 and change. We got right back up, we retested, and then instantly started to sell off. And that's not what you want to see. And the sell off, unfortunately, even though it's a small pullback, it's right boom through the 20 and the 50-day simple moving averages, which are very tight, right? And so remember, way back to the beginning, what we're looking for from a moving average perspective is we're looking for those SMAs to really get into like very tight consolidation and then start to see the range of those expanding. And what's true is that these ranges of these simple moving averages, they're not expanding, right? Yeah. They're contracting. Yep. They're about to expand depending on where it goes, but it's in a very tight pattern. So this is why I would say that NVIDIA is in a long-term consolidation. So, you know, you can accumulate at the lows. So the next low that you'd be looking for is like that 110, just barely under 110 kind of area, right in here. And that would be essentially towards the bottom end of this consolidation. So if you can get it towards the bottom end of this consolidation, right? Let's say it comes in like that, and then be cautious towards the top end. I think that's what we see for a while, right? Until, like I said, until it goes somewhere.
Especially until earnings can justify, you know.
Yeah, it needs a big catalyst.
Yeah.
So, but this is a large consolidation. I think you can be accumulating down here if you get the opportunity. But just know it's not, unless it's like really exploding through like these highs. And again, 1, 2, 3. It's not breaking out. But you never know. Something could happen.
All right, let's do SOFI.
Uh-huh.
Do you still have your options?
Not log chart, Douglas. Yeah, I still have SOFI. It's still not like a massive position. I added a little bit to it. I also added, did I tell you, was it 2 weeks ago? We said Rocket Lab, like 550s. I added. Did you add?
I did not add.
That's like up 50% already from the ad.
Yeah, that's 750 already.
But anyways, so SOFI is still in the similar. The difference here between like a SOFI and NVIDIA is that see how these simple moving averages, they're getting tighter, right? They're getting tighter. They're not there yet. We're going to get there. And they're going to start to do this, and it's probably going to start to come down. So it's going to look like this, and it's going to get real choppy for a minute. This needs a catalyst. This looks like it's happening, but the catalyst has got to be.
It's cuts. It's right. Yeah,
it's rate cuts, right? So it is rate cuts. I think this and a lot of the lenders. Did you see my NYCV today? Is like up. But do you even know I have that NYCV?
I didn't know you had that one. No, that's a good one.
Oh yeah, we have this one. Imagine if New York Community Bank recovers.
like 15 on this thing, or?
Yeah. Oh, yeah. We've been accumulating like tens, below tens. But imagine if this comes back like holy camole.
Yeah.
This
It
is a big.
was a big collapse when it happened.
Dude, I'm right in the heat of it. But anyways,
Is there a inverse head and shoulders on SoFi?
inverse head and shoulders. No. You mean like this? Like kind of. So it's if you take it post this breakout, right? So here's the breakout, retest here. So if you just take like this snapshot from here to here, you can see it. So here, there. I wouldn't really call it inverse head and shoulders, no. And honestly, like a small dollar stock, you'd really be looking at it at a larger scale. So this looks like a slow, steady kind of, this whole thing is a retest of this prior area, right? And so like, just generally speaking, the characteristic of this stock now, it looks pretty healthy to me, technically speaking. Like this looks like an area that you want to be in. 816, 812. It's similar to where Robinhood was, right? So everything is right there. So here's that last breakdown, and this can go, I guess that's a daily gap. Was that earnings? No. So right into this area, we'll call it here, 875. You have this last breakdown. So I think that we get like another impulse, but I don't know that it really gets all the way through. But this gets very squeezy, like extremely squeezy. But for right now, look, this is the accumulation. This is the base, right? So everything underneath 7 is where they're now, you know, from before when investors were accumulating sub 6, now they started accumulating sub 7. And so let's say this continues on higher. Eventually, what we'd like to see is like in 6 to 9 months from now, we start talking about people accumulating SoFi sub 9.
Yes.
Right.
Yeah.
And that's the trajectory that we want to see. Whether or not this is on a daily time frame, look, I don't think that if you're in SoFi, you're not so myopic in view. Like this has got to be a longer term play because it's not been like it's been a tough ride for anybody, regardless. I still think like that $10 is going to be a major area, but for right now, we're still this.
Are you at all intrigued by the January 2027 $15 leaps on SoFi?
Yeah, dude. No, it was it was the $10.
No, but I know, but I'm asking because the 2027s are out, or the highest strike is $15. They're a little bit more expensive than the $12 June 2026s, but
well, I like the June $10.
you like the June $10 ones. Okay.
Yeah, I like the June $10. And I think we saw it come out, right? We saw it massive order, and also they're not like crazy. But I like the June $10. Look, SoFi here, this is massive consolidation still. So if you're gonna do anything like that, Amit, what I can tell you is like you got to do it before this is over $9.
Yeah.
Like you can't be doing that over $9 and waiting, because the second that happens, it's gonna boom. All this volatility is going to be insanely, like it's going to double, triple.
The premiums are going to be way too expensive.
Yeah, we're talking about a 3-year base that SoFi is attempting to work out of. Again, we'll use that same kind of exercise. If this was the base, we're looking at 12s plus, right? And like we're looking at 12s, really. And that's, yeah, I don't hate that, right? At 25th percentile IV. 180,000 calls today to 60,000 puts. It's not horrible. Today's largest order. Looks like TJ is probably selling a bunch of September $8 calls. See a lot of those sold. I'm joking. But yeah, Jan 16th, $20 calls. That's a lotto.
Definitely a lotto.
But
okay, cool.
But yeah, ahead of FOMC. Yeah.
Can we do Intel?
Are you long?
I'm not long.
I was told to tell you to buy it.
I told you to tell me.
I can't say that.
He likes it?
No, I don't even remember. But until I had 23. So 23 hit. It didn't hold. I think, look, we talked about this. I can't really get behind Intel from a company, unless, of course, China invades Taiwan. I'm all about it, right? But 23 is kind of like your big level. So here's, I'll look at this a little bit differently, right? So post earnings debacle, we have a couple levels. So Intel, and we can look at this like we were looking at Airbnb. We look at any other company that has this kind of like massive earnings fail. Then they start to slowly work their way back up. And the process of how those technically look are always the same. If that makes sense. They're always the same. And so what I'll say is you take inside this consolidation area. Now, everything I think from here, I think that this is the low, 18 and change, right? I think that the fundamental story is starting to change. So I think that this is the lows, call it like 1850s. So assume that below here, below 20, let's say, that is your base, right? So if you're looking to get net new long, you just know that you don't want to be long this below 1850, because then you're just, it's all gone and you're going to, lower lows, hopefully, or possibly.
Right.
This area right here, and there's a little bit of a gap. So I'll take this gap in here to here, becomes that last, what was resistance. So I'm taking, it's a small box on the big chart. So again, pretty myopic, but what we want to do is we want to see this new green box become the new level of support. So if this was support down here, what we want to see is we really want to see this area right in here becoming support. And so where that leaves you is right around 21. So assuming that this is, let's take it from this breakout here. And I'll just do a regular fib extension or fib. Yeah. So this is anything in here around that 21 area. It's 21. That's what you want to see hold. And so if you're looking for new money longs, that's honestly it. And so what you'd be looking for is you're looking for this to lock in a higher low, let's say somewhere like this. And then it can take a slower grind and then start to chop and then go higher, right? So this is what that kind of trajectory would look like. It's a funky squiggle. But let's take a look at a chart that's done that recently, like Airbnb.
Yeah, this is a good one.
So big earnings fail, right? And so same exact exercise. So you have these certain areas here. This was that quick level of support, right? And so it's always the same trajectory. It can be choppy is my point. So you get these false breakouts, but what happens is that you create this new kind of level of support. And it looks like, from that first earnings level, this was 113 essentially. Bounce up, held, 113 held. It looks like you get a breakout, but it comes back in, retest it. And then eventually it starts to hold and you get something. You get whatever. I don't even know that this was earnings, but you get a big move and you start retracing all of this, right? And so right now, that's exactly what's happening, right? Airbnb is starting to recover, but this is what it looks like, right? We can do this same exercise over and over and over again. Shopify, I think, wasn't it Shopify? Yeah. I mean, this is a whole nother one, but it's even, no, that's earnings here. So big fail, earnings. Even this one, it kind of creates this base, same thing. And slowly you start to see it start to like stutter step. And finally, you're just looking at this series of higher highs and higher lows, mostly higher lows, because it can be choppy for a bit. But it's this snapshot, really, like this view, that if you were to look at any chart and say, what is the definition of, let's call it accumulation? It's literally this right here. And so you'll have your area of what we call accumulation, and then you can draw it a little bit to the right. And eventually it breaks out, but it doesn't like shoot up. You get a retest, boom, right in here. And then it starts to slowly grind higher until eventually it's over, right? Whether or not it comes back, whole nother thing. but you have to just keep monitoring, make sure that you have higher highs and higher lows. But this is almost exactly what you'd want to see on Intel. So if we go back to that Intel chart, where we are, so longer term, here is that consolidation, right? So we've moved up. It can come in. It's going to be slow grind. If you want to sell some calls, you probably could here. Very near dated, maybe. I don't know. Intel's, I don't even know.
The thing is, they had a great catalyst yesterday, but the market faded it pretty quickly.
They did, but at the same time, it's like, dude, there's not a lot of premium to be had in Intel, selling calls. So it's not, I don't actually, unless you have like this type of massive catalyst upside, without this, it doesn't really make sense to be short calls until you have something like that. And then, for a little bit, you can be short calls. That's just me. But you're going right back into this volatility. It's probably slightly elevated, but if it comes back to 20, the market's going to say, hey, look, Intel has been at $20 for 45 days. All of that extra volatility is going to be out pretty quickly. And you can be looking for this kind of like, retest in not that low, but I'd say like that 21 level, something like this. And that's that exact same kind of Shopify view, right? So if this was where resistance was before, you want to at least see that as long as it's trading over 2050, I think you're okay. But it's a long haul, man. So I mean, it's a different story today than it was last week, right? For sure, it's a different story. Things are changing. Is it a turnaround story? I don't know. But stocks do make the biggest moves when they go from absolute crap to just okay, right?
Two quick headlines, and then let's load up Celsius. So Steve Cohen is leaving Point 72, or at least he's stopping trading from Bloomberg. And then two, BlackRock and Microsoft are teaming up to launch a $30 billion AI infrastructure investment fund.
Fund?
Focuses energy demand. That's the company, or that's what they're focused on. Yeah, why don't we do Microsoft and then we'll do Celsius? What do you think?
Microsoft is starting to look. So Microsoft is not looking bad, right? So this was, and I think this could be one of those situations where actually, yeah, it is. So here was that prior consolidation. Here's Microsoft. And what I did just now is I pulled out, I zoomed out and I just took some of these candles off. So this is an oscillator. This looks like pretty bearish setup, right? And so what I said earlier is like when you have a failed like bearish setup, it becomes one of the most bullish things that you can see in the market. To me, we've always said like your buy zone on Microsoft is sub 400. Whenever you get that opportunity, it was always a buy in this recent, pullbacks. So it's still true. So this goes forward. Let me move it forward a little bit, and you get that boom, just barely sub 400, right into this demand again, and instantly. What's true is that they couldn't break it down. This right here, this moment was the opportunity for the bears just to start slamming it, right? So like if the bears were like out of hibernation, they would have hammered this right then and right there really hard, and we would have seen like a nasty red candle like this, like on a weekly scale, and it would have come all the way down. But that's not what happened, right? So because they couldn't push it down, it's got to go back up to at least collect more sellers. Even if you want to be bearish, which I'm not, but you have to know if you can't break that level, you immediately go. And this becomes one of those failed bearish setups that is very, very bullish, right? And so at this point, I think that honestly, I think we are talking about Microsoft like over 500 not too long from now. Sorry, wild to say, but yeah, this looks like, hey, look, we're gonna get to 458s as long as we can get over this last. So here is this not like you don't want to be. It's not a market where I would be apt to like see breakout buying or do a lot of breakout buying. I like the retest buying right now. So this is that perfect retest. The next retest, if you have it, is the same line, and then we'd want to see like what we call like that little flag pull back a little bit, consolidate around 430s, and then ready for the next run. So let it rest, consolidate around 430s. That's the level that we want to see it hold, and then we can get back into the 450s.
Do you think that they're not a bit extended at the PE they're at, 35-ish here, or you don't care?
This is Amit talking about Apple historically, right? So like, if
by the way, we got to talk about that phone. Don't worry, that's coming up.
Look, if you only think about a company in historical context, then sure, right? But like, if you don't think about it like in terms of like forward looking, you know, in terms of what, from a technology perspective, I think the Copilot at the retail level is very interesting, like very, very interesting. Imagine like every PC that you buy, you know, in the foreseeable future.
Let's be real here. In Q3, the Copilot growth is going to be anemic. Azure is the only.
No. I think that the enterprise estimates for Copilot is way over the top, completely overstated. I don't really think that it's yeah, to your point, absolutely anemic, right? So small, it shouldn't really hit the radar. But at the retail, like at the PC level, consumer level, not enterprise, I think the market's underplaying that. I don't think that they're really seeing that full opportunity. So I think there's a little give and take. But hey, look, we just got some Copilot news today for Wave 2. You know, that, you know, I think the market can start to adjust and start to see some of that pricing in.
Okay, well, why don't we do Apple and then we'll do Celsius? And give me your thoughts on this iPhone 16 and if anyone's actually going to buy this thing.
I'm going to buy it.
Of course, you got to protect your investment, but besides,
I mean, I don't have to, like, I'm going to buy it, but I think not yet. Like, I wouldn't buy Apple here now. I'll give you that, right? I think the Apple gets like one little teeny tiny more dip, but this is like a show me story. It just depends, right? Like, I think whatever. So apparently, like iPhone pre-sales. The question is, do you look at iPhone pre-sales like opening weekend in a box office? I don't know, right? I think it's like I didn't put in a pre-order for an iPhone 16. I'll tell you that. But I think, you know, over the long term, I think it does, right? So what we're looking at is another like massive consolidation area, and so this is Apple after a very large run. Let's be fair, right? The run from 168, which is like, I just bought this not that long ago. I feel like not in April, right? It's a big run. And so I'd like to see this kind of consolidate. I'm going to take this down. I think this is really relevant. And you see like this dip was bought, but I'm looking at this kind of like 210 area. So this has got to hold more or less. And we're not going to be out of the weeds until, what I would do here is I would say grab this top and this top right here, which is a lower high. And I think you begin to do some kind of like consolidation area. Whether or not it's right here, I don't know. But I think that this ends up going, you could dip like one more red day and possibly into that 210. And then if you see it reclaim, I think you're going to see an NVIDIA like day. That's right in there, but that's not a breakout. I wouldn't chase that. I think this still goes into consolidation for a while. Look, this is a big run. But I think this is
in which this thing shits the bed and no one buys the phone and it's back at.
It's not going to tank the stock.
But why not? Why?
What's tank the stock anyways? Let's define that. What's tank the stock?
185.
185?
I mean, dude, Vision Pro is a failure. If this thing doesn't sell, it's not going to recognize the growth. No, I'm serious. Like, give me the reason why it doesn't tank 20% from here.
20%. What? So to
Maybe
me,
not 185, maybe 200, whatever that.
Oh, they'd already did that, dude.
No, it's at 215. That's not 200.
It did 195 the other day, bro.
No, what do you mean 190? That was August 5th. It did not do 190.
Yeah, that's the other day.
I'm talking about Q3 earnings comes out and Tim Cook's like, guys, no one bought the fucking phone.
Well, first of all, he would never say that, right? And second of all, it's like the entire cycle, right? Like you start talking about Apple, it's like the whole wearables situation, right? Whether or not it's Vision Pro, it doesn't matter. Like, do people buy the Quest, like Meta Quest? Not really, right? You know, it's Vision Pro. It's not like it was this massive, you know, bet the farm on it. Like Apple has freaking home robots too, which is like, what's that about? So I wouldn't put stock into that. I think, you know, what I'm saying is I think that 210 is like your near term kind of floor, right? And so that would be like a retest of this area. I don't know if what would the PE be at 210? I don't really know.
27, I think.
27?
No, not 27, 30, because right now it's like 33.
At 30, I think it's fine. You know, in terms of like, where's this cycle going?
So you're not worried about the
there's
phone?
There's no storyline for Apple that's like it's only in the Google antitrust stuff, right? That's the only storyline that would justify Apple really taking a dump, right? And that's like, okay, tomorrow you're out, right? All that money's gone, and you don't have the next iteration of what you're going to supplement this income with, right? That's the only storyline that I could say is immediate. But even in that event, I feel like they're going to come out and they'll, even if the stock gets hit for something like that, they'd immediately come out and be like, this is what we're launching and it's coming out next week. So it would be a near term thing. Question is, if that happens, are you going to buy it?
I'm not buying Apple, dude. I mean, I'm not. Like, I'd rather buy Palantir at 37 than buy Apple. I mean, like,
you're crazy.
I get Apple's probably cheaper from that, but I really don't see what their future is. Like, I just don't see it.
I'm just saying, it's not a bullish chart. I mean, not a bearish chart. Sorry.
Well, is the Apple chart ever bearish? I mean, Apple's Apple, but
I mean, you get these pullbacks. Yeah.
All right. No, look, I think they'll sell phones. I don't know if there's a super cycle though. I don't know if there's a super cycle.
It's a super cycle at my house.
Dude, every analyst came out and they said, well, we think the iPhone 17 is going to be the super cycle. I was like,
today?
No, on Friday last week, I read JP Morgan Gold, Bernstein, all of them were like, yeah, we kind of didn't see anything in the Apple event that would suggest consumers are going to upgrade, yada, yada, yada. Pre-sales were 12% lower than last year. That came out yesterday on Monday.
You got a couple more catalysts to go, though, right? Like, it's just
what couple more catalysts? What are you talking
about? Evan. We need Evan. Where's
what
Evan?
No. What? Someone in the chat. What catalyst is left for Apple this year, besides the holiday season? Like, I mean, I'm not bearish Apple. I'm just saying I don't want this to be the Vision Pro. It was an obvious failure.
I don't believe in the Vision Pro, right? But I do believe in some iteration of like visualized AI of some sort, right? Whatever it is, maybe not Vision Pro specifically. Oh yeah.
I just don't want it to be so obvious. There's no reason to upgrade. What if no one upgrades? Just like Vision Pro, there's no reason to buy it. No one bought it. Like, I just don't want it to be literally, hey, there's no reason to upgrade. No one's gonna upgrade. It's not rocket science. It's 2 + 2 = 4. Like, that might happen.
Dude, they're one of the most profitable companies out there right now, regardless of what you say.
Steve reminds me, they have $100 billion in free cash flow. I'm like, I didn't ask about that, Steve. I asked about growth, my guy. I asked about growth.
It's profit growth. It's profit growth. So, anyways.
Celsius.
Anyways, we're just gonna go back and forth for days. Celsius. So I had sold. I've sold $35 puts, and here I'll just. So like in our group when we do this, so I think that Celsius is an area where like it's tough. I think that Ivy was kind of, where'd it go? Where's my, look, dude, by the way, like my last Tesla or Apple, where's Apple's? It's like 170s, 160s.
I know you're good. You called this very well. I'm not saying you're wrong at that.
Where is my Celsius? Oh my goodness. Apple? It's got to be way up here. It's reopened. Oh my God. Anyways, I have to find it, but it's selling $35 puts and $30 puts for Celsius, which I think honestly, like we're firmly in what we call like the gap, right? So you have the session gap over there. This is way over here, that prior. So this was the area. So when we talked the week before last, right? You asked me if I was buying Celsius then. And I said, yes.
That was a 31.
And you said, do I think it's the bottom?
You were like, it better be if I'm buying.
And I was like, I wouldn't be buying it if I didn't think it was the bottom. But the way I started buying it was I bought equity. And the only time I really, here it is. So there it is. So the only time I really start, so it's below 36 down to 20 to 31. And I had to stop at like 27, near-term profit target 48 plus, right? And so this was in this area where I started to get it. And it was literally 31.50. And I was selling puts, $30 puts, selling $35 puts. And so they're all green now. And I'm also buying equities. The only time I ever sell puts personally is when I'm already getting long the stock and I don't have a problem with the optionality of potentially getting longer at even deeper discounts if I do get assigned. And so that was the situation. Everything's green here. I already started closing out some $30 puts just to lock in some profits, but I'm still building this position. I think, what I need to see is I need to see it really get over that session gap. And so I'm going to take this red line off. We didn't do it yet. So it's this area right here. So 35.81. I really need to see a daily close over that. And until then, like I'll still be, I think this is in like the base, like it's creating a base. So I don't think this is ready for like long options. I think short options is ideally the play right now. And I think that this area becomes like this new kind of consolidation zone, which it's spent a lot of time in before. So this still, this $30 level still becomes like your real supply. But I think this area that it stayed stuck in for a while becomes another area that it stays stuck in for a little bit. So to me, I'm in more, and that's up to 39.40. I'm more in accumulation mode down to that 31 in that like as close to that 31 area as I can. But what I don't want to do is I don't want to be buying it below 28, right? And if it's below 27, I just know, hey, it's over, right? So it was the like short-term bottom. Is it breaking out? It's not breaking out. So to be fair, it's not breaking out. It was the recent low. We need to get over 36 to really start really moving.
Well, it's having momentum. It's not like it's doing bad at all. Right?
No, but see what I don't like right now is like, see these top wicks?
Yes.
So I don't like those. So when you see top wicks like that, I'd rather see it like if I inverse this chart, I'd rather see them on the bottom of the candle. So like I just flipped this chart upside down. But if it was on the bottom, that means that there's a lot of buying pressure. What I'm seeing here is that there's still people like presenting some kind of selling pressure in that area. So I really want to see it create this base. I don't think it's ready to break out. We're again back to this net new candle that I would be looking for that's over 36 really. And then it's off the race. But I think until then, this area, I'd like to see it hold. Just these recent kind of like 33.50s. If from here, as long as it's holding 33.50, it can chop, inside this range and I'd be fine. Even if it can't break out and it does this, and then finally I get a day that's over, I'm happy with that. It's not a short-term thing.
Right. Okay. Can we look quickly at Oracle?
33.50. If you're looking for this to lock a higher low, so it would be 33.50s in that area.
Okay. Has this been on your radar at all, or
No.
didn't care this year?
Nah, I think some of our traders do trade this. I do not, just because it doesn't have the option. Like I guess you can. It's just not really one of mine. This is a big breakout. I think it's the same thing. Like this is like the pattern is full, Ghost Rider, right? Like Amit doesn't even know what that is, huh?
Ghost Rider's a movie? What is that shit? It's a song?
Oh god, the pattern is full.
The
So
battery
this
is full.
is
I'm
like
about to look that up. The battery is full.
the
Ghost
pattern.
Rider. Oh, pattern.
So like this is your consolidation in here, right? And you had a similar one here. So this is your this is your classic cup and handle type thing. And then using those extensions that we just talked about, your pattern is full. I would not press the bet here. It's not a sell, but it needs to do another consolidation, right? And that's ideally what you would be looking for. I think you stay long. But it's not like press your bets. Like you could sell some upside calls here because you definitely have some elevated volatility. But it's not like you get this crazy double top 175. Unless it's over 175, it's not really breaking out. But it's the same kind of like consolidation, right? So you took this, and I keep changing my tools.
By the way, I figured out what it means now. I'm going to use this phrase. The pattern is full.
Yeah.
Did you know what catawampus means?
I heard you say that the other day. So yeah. So this consolidation here, let me just take that off. So here's the consolidation, breakout, small breakout. So by the way, this is from here to here. Take this down. This is that kind of like, if this was hood, right? Yeah, this pullback, you have that 50% extension, so 50% of your consolidation. So it breaks out, you get to that 50% level, you come back in, you retest that prior consolidation, it becomes a new base, and you start to chop higher until you finally pop out of that, break out one more time, right? And then this, again, it's another extension of up to, but in this whole situation, this is beyond like 150%. So yeah, I think, 150s would be that next area that you'd want to see it consolidate over. Down to like, it could be down to as low as 130s, 128, but that would still be a healthy consolidation like that.
Okay.
But that's usually what we see. So you get a breakout, pull back, and that's why I think this market is very bullish. But I'm not into the like I want to buy the breakout. I'd rather buy the retest. Yeah. So a retest is something like this, and a retest is something in here. Okay.
Jason's Twitter, guys, just to make sure you check him out. Can we do CrowdStrike? CrowdStrike would be.
Does he know about H part? Yeah, I'm not into the token stuff.
Dude, Trump launched some weird ass thing last night.
Yeah, I know. I saw that.
It's weird, dude. It's weird, but
Rodolfo, Jason's like, I really don't give.
Okay, let's do CrowdStrike.
And,
see if this one's moving.
Did you know I'm looking at this right now?
I didn't know that. No.
Oh, so they have an investor relations.
Oh yeah, they do tomorrow, right?
Yeah. So I already had this because I was already looking at and Salesforce tomorrow after hours also. So Dreamforce is happening now, by the way.
Oh yeah.
And then tomorrow after hours, Salesforce is going to have some kind of announcement. So I'm looking at 250 on Salesforce, by the way. If we get a pullback, we can look at it. So tomorrow is the investor briefing.
Basically, they're supposed to make sure their guidance doesn't go to shit at this briefing.
Yeah. So I think this is a big moment for CrowdStrike. It's a big moment technically for CrowdStrike. I will tell you, I think that 270 is that key pivot. So where we are, this doesn't look bad, right? So we got that big breakdown. Actually, so I was short, but now I'm looking. I haven't been short for a long time, by the way. This is what we call, so if I drew my fibs, so from the swing low to swing high, we've talked about this a couple of times. We talk about this as the golden zone, but I, and my crew love what we call the golden pocket, which is a very teeny tiny spot, boom, right here between a 618 and a 65 retracement. And that's exactly where CrowdStrike landed. Happened at the time to, that is ugly, to line up with a 200 week simple moving average. And now we're finally crossing back over the 20-day simple moving average right into a pretty key order block, which is going to line up right here. So that's 272. I think this situation, even here, so you're based out, even this most recent pullback. So from here to here, this pullback here from this swing low to this swing high, actually constructive, is a 50% retracement, also lining up to this key order block at 245 and general level, right? So right here. So this, we got to go pretty far back. If I can get, anyways, it's right in here. So that was a pretty big moment for CrowdStrike to get to hold 245. I think right now we're looking like we want to breach, remember, peak to peak. So if this is that last peak, volume peak on this mountain range on the right hand side, the one above it is pretty high, right? So it's this consolidation area. And so you'd be looking to fill this low volume pocket. So you trade through the valleys, right? So if this is the mountain range, the valley is through here. So whenever you see these kind of areas, those are the times that what this tells you is that this is a situation where velocity of price movement can really accelerate through these valleys. So we got, or low volume pockets rather. And so I'm looking at CrowdStrike here. If we can get over 73 and we close, we tagged it this morning, like tagged it today, almost. I like this. And I like this for short dated options and long dated options. So I was looking at the option chain today in all kinds of flavors, but this was one I was just recent, 33 percentile, right, on options volatility. They're not expensive by any stretch of the imagination. You have earnings coming in late November. I did see a heavy order of like 290 to 310 call debit spreads, which captures essentially this entire range here. And again, knowing that I actually don't hate that at all. It was the exact right price that you want to see, but it was targeting this volume profile right here. That was for January. But I saw some pretty bullish sentiment across the board. I think that, you know, that they're targeting that just over 300 levels. That tomorrow could be a big day for CrowdStrike. And I like it because aside from FOMC, so knowing that CrowdStrike has its own independent catalyst on deck, this is one where I would definitely have on watch, like heavy watch. It wasn't like, you know, insane amount of volume, but today was a day where I could clearly see a lot of call option buyers building in this name today. So again, over that 273 level, if we open over, maybe not tomorrow, but like a Thursday, Friday, that gives us this kind of candle that would be ideal.
Yeah, I mean, and the big thing about them is their guidance has not been hit as aggressively as people thought it would. So if they can
like I thought I was in the camp like they're going to cut this guidance, and they just didn't, right? So it was right to trim, I guess, right here, like from a trading perspective. But again, it hit this 245, it locked a higher low. So at minimum, this goes into some kind of consolidation. But for now, like this area becomes the area of interest, and it's really like you can zoom this out right here. So even if it pulls back again, I'd still be looking for yet another higher low around that 260 type level.
Okay, can we do Rocket Lab?
But you didn't buy it. You didn't buy the dip. So I mean, like, what are we
got
doing?
people in the chat who bought the dip.
Anyways, it was this level. Do they have any launches?
I think they have one tomorrow.
Oh, really?
I think so. The guys in the chat, do they have one tomorrow? I'm pretty sure they do.
Shot Rocket Lab. Oh.
I'm
almost half. Who thought that Amit was going to say he sold some Palantir today?
Dude,
did anybody think that?
Ready. They were ready.
Did anybody think that? I just need a Y or N. Yes, no. But I wasn't sure if you were going to say Hood or Palantir.
Well, see, I don't have options on Palantir, so to me, it's just a long holding.
Oh, okay.
It's mainly
fair. So this was that. It's the same kind of thing. So even like when we think about Shopify, when we just looked at that, what is that, accumulation base or Intel? It's the same situation. So before the base where they were accumulating was down here, right? And then I was looking for this area to become that like another accumulation. Boom, 550 tagged it, right? Higher low. It's not higher high yet. So this whole thing becomes, I think we just kind of chop one more time, to be fair. I don't know that it's ready to roll, but I want to see another higher low. And if I do, that would be somewhere around like 650s, give or take. Otherwise, I'm just long, man. And we're just like I still think it's in accumulation mode, right? So it's still creating its base. So whatever it is, it's still creating the base. We're not through the moon until we're over $8, to be fair. Like if we're on $8, this is like nobody adds anymore. You're just going for the ride. But down here is where like, look, again, stick in the drawer, maybe get lucky. Rocket Lab.
Do you think this run back to 740s is reasonable? Because it tested these levels a couple times and then came back down. So what's the odds that it just goes right back to 550?
550?
Like where it was.
I mean, so right here is where you are, right? So this is that last breakdown area. So I think it can continue higher, but like this is the area of concern. Like this is a no touch zone to be. So the reason why I said this is a no touch, right? It's either going to go or it doesn't, right? And it's like, I'm already in. It's not a great risk reward to add. Like I said, that's just me. The breakout stuff is not really my deal. Where that higher low would be is like this little hump right here. When I said 650s, I think it's this, right? Like, so does this area become that next kind of base? Does that make sense? So, and this is where I'd say, like, if you see it, okay, then you get its consolidation. We go, and then a little bit, and then it's not like breakout time till we're way over here, but that's a ways away. Let's see, till it gets a little bit more mainstream, like large investment base, it's still kind of like chopping around. But hey, it could make for a good trader if you're into trading it.
Okay. We got Francis Tesh that said, "This is my first time sitting in on this session with Amit and Chris. And
this is paper.
Mind.
We do like Chris though.
This is Jason, but yes, Chris is awesome. But
we do love Chris.
We got Jason here. Thank you for being here. Hopefully you're getting some value. Can we do ELF? Because this one got schmacked yesterday.
I was thinking about ELF. Do you see Ulta's getting up to 400 again too?
Buffett is the GOAT. So,
I mean,
although he sold all of his Apple, but let
this create a base. I don't need to go catching knives necessarily. Let this create a base. If it creates a base, it's going to be right here. And so this, when I say right here, it's this, right? There's a little teeny tiny, looks like session gap. Let me see if this got filled. Oh, you know what? That's an earnings gap. It's pretty close to being filled. That's close enough. But I think if you draw this across, it's there. The one that's like, do you see this? Ruru, Raymond. Interesting.
Lulu.
Interesting. I don't know. I'm never going to go long Ruru. But if it was ever in a place to be poised for let's call it a pre-earnings run-up, this is that. Just saying. You know why it's called Ruru, right?
Because I called it Ruru by accident once.
No. Like, why is Lulu Lemon named?
Why aren't you on ChatGPT? What are you using these links for?
I don't know. Because Chip Wilson thought it would sound exotic to Western Japanese buyers who always pronouncing the letter L with R. He wanted to come up with a name that had the most L's in it because he thought it was funny.
Wait, so he wanted to call it Ruru, but he called it Lulu.
No, he thought it was funny the way that Japanese people pronounce the letter L because there's no L in Japanese like vocabulary.
And this Chip Wilson guy, he's like, what? He's a white guy, or who?
Yeah, man, he's the original CEO.
Why does he care about Japanese? This launched in Japan.
Yeah.
Oh, I didn't know Lululemon launched in Japan. Okay.
Japanese making it hard. Pronouncing the letter L was an extra marketing tool. So this is probably why we'll never be long Ruru, but also why we call it Ruru.
That's a good point. That's a good
Just
point. Okay,
saying.
so you think this is similar to
Today
Elf?
I learned, right?
Yeah, today I learned. You think this reminds you of Elf for some reason?
Yeah, so like you want to see, so Elf is like you're just knifing right into that level, right? So it's like Lulu was knifing right into this level. I want to see if I'm going to do something like that. What I want to see is I want to see the stocks creating some kind of base, unless I have like ultra mega conviction. Let's say if Palantir gets cut in half one day for some random market sell off, you're like, okay, fine, we go. Right. But even in those situations, you have to know, like, look, it could still go lower. But if I have some kind of like basing formation where it's spent a few days in a little like consolidation, that's why you give the stocks room to rest. Stocks are running and then they're resting, right? And then they're running and then they're resting. So Ramon has been on a big run to the downside and it's had a nice little rest. So like if I were to be long, this is actually the spot that I might be looking to get long, sub 270s, but they got earnings coming end of December. I think this could create a nice little base. And like, if it's over this peak right here, 268, I think you start to reverse trend.
Okay. That's fair.
So what I was saying, so when you look at ELF, it's just knifed. Right, it's just knifed right into it. This basing situation is not convincing to me. So I think maybe you get one more smaller dip right into this area, and I think that is going to put you at $97.28. Not to be specific at all, but exactly $97.28.
Yeah, and their growth story was phenomenal, but the growth has slowed down, and I guess that's why the market's punishing them.
Yeah.
But they do.
But even when it gets there, right? So when it gets there, I don't know that you don't have to buy it right away. It's like you watch it in this area, and then you want to see it create another base, and then slowly start to creep up,
right?
And then it's good. Then you know that it's created the base. But until I see that, I could just watch it. But yeah, I think it was Ulta. Ulta was kind of catching my eye. Yeah. Same thing. So like nice base, and then it starts to give you this type of kind of formation up again. And that's, again, it's at a key level.
Right. Can we look at Oxy oil? Are you interested at all, given oil's collapsed?
Oil collapsed.
80 to 67.
And then it went from 67 to 80 and 80 to 67.
Yeah, I get it.
So I think so. OPEC actually, I do this Monday thing, right? And there was news. OPEC had dropped their, let's see, what was it?
They're dropping their production or a little bit.
Was it that? Yeah. Sorry. Let me see. What was it? It was OPEC. OPEC trims forecast to crude demand growth in 2024, 2025. So I think that's oil. So if you want to look at the refiners and stuff like that, or what is Oxy going to be? I think this is, let's just look at Oxy. I think that's there. This was that big, I don't know how Oxy was ever down here. When you look at these kind of charts, you're like, what? But this was the last level. I'm going to move this over here and just see where was that base. And we're going way far back in the way back machine. I think this is viable, dude. But the question is like, what's your time frame? Nobody here is going to have a time frame like Buffett. I don't think.
Well, yeah, he's been buying it to like low-key buy the whole company, I feel like.
Something. But it's this area, right? So where it was kind of basing before. Sorry. My mouse is like, it's so sensitive. 47. Did we get to 47? Oh,
Do we?
no. I think this is a liquidity grab, man. This looks like it's the setup of what we would call a liquidity grab. I don't even know what that volume pocket is. I don't even know what was going on with Oxy here when it started to really break out. But I think it's this 46.86 in here is like, if you were gonna be buying, it's probably accumulation. You have like this little defense. You haven't seen this price on Oxy in a long time.
We haven't.
Oh, dude, I was trading this back then. I remember taking this from like 25 to 35 or 6 and whatever. I took all this.
That was what, 2020?
No, just 2022.
Oh yeah.
I remember I had like near dated option contracts on all of this. And then we closed it. This was coming out of COVID. Yeah, this just looks like basic liquidity. Here's the thing, right? You can try to dip buy this, but it could continue to falter. It's back in your trend over 56, right? So from here, you can take a stab at it. 55 and change right here. This is that last area. If it reclaims this area, then I think you're okay, right? If you take this consolidation, if it's over 60, you're back in an uptrend. But from here, this is what we would like define as like a possible liquidity grab down here. I wouldn't be surprised to hear, oh, Buffett's coming out and bought another 40%.
I mean, dude, he's selling the shit out of Bank of America. You would imagine he's going to react.
I don't know that he wants to own that much more Oxy, but this is a decent retest. But I will say I do remember these explosive moves to the upside. I don't know that that just seems too cheap to me. That's like SLB seems too cheap to me here. Like it's a buy. Slab. Yeah. I feel like this is like a buy to you. But if you look at crude, it's just been in this clean range, right? So this is that area. 67s are where you'd be a buyer and you're a seller in the 75s. I think, what's true is that the refiners, like, they make money as long as crude's over 45, right? So whatever crude does, like, they're making money, they're profitable. The one that I feel like is in a better position from a trading perspective is Exxon, right? And it has been in the same kind of consolidation too, but it just gave you like one more sweep of liquidity down here. In that like 110s area. So trying to come back up. Whether or not this can break out, I think that's the question, right? So if you look at Exxon, here now, if this can continue, I think this is going to be your first tell, right? It's not breaking out, but this is clear consolidation and range. We would call it range trading. So down here is like your buys. And then honestly, like up here is your sells. So if this is the low end of the range, you probably want to be picking it up. And your job in something like this is really just to like, okay, you could dip it, but accumulate more shares till you can basically get shares for free. And eventually it breaks out. But like, I think here they have, Exxon has like a December 10th. So they have earnings October. Again, these guys, I think best of breed here, Exxon. There's the December investor meeting and a handful of other things, but like Exxon, probably a better trader if we're talking about trading. If we're just talking about investing, I think still Exxon for me. But yeah, this is a very long base at the highs, mind you, that Exxon has had over the last 2 years.
Okay, I want to do crypto now because
I'm not doing Lunar.
Lunar is up 40% after hours for some weird.
Dude, no, I'm not doing Lunar. Weekend. All right, crypto.
Yeah, I think we're done with stocks for the day. Maybe we do one or two, but what the hell's going on with Bitcoin, dude? And
I was really trying for 60. Miss Cleo said it's going to reverse.
Who's Miss Cleo?
What?
Miss Cleo. Who's Miss Cleo?
You remember like in the 90s? Were you around in the 90s? Miss Cleo was like, it's a 1-900 number. We get a tarot
no,
card
I
reading.
remember this. I remember this.
This is the crypto for crypto, 8 of Wands. But she said something.
Did she say bullish stuff or bearish?
No, she said Monday death. Tuesday is reversal. Wednesday is the hangman, taking self-imposed break in order to get our minds right before taking the next step. Chop rallies being sold most of the day tomorrow. I don't know.
So are we going up or down? What do you think?
She said we're going sideways, dude.
Well, no, that's not good enough. Like this thing is fucking getting annoying at this point, dude. Like,
dude, it's crypto, man. It's like I said, it's the accumulation type event, right? I really don't like
the only one who's been accumulating this year is BlackRock. That's what it feels like, to be honest. And if BlackRock wasn't accumulating, I don't know where this price.
Well, your guy's been accumulating.
You?
Sailor? Michael Sailor?
Oh my god, dude.
So it's we're playing what we call like simple moving average ping pong, right? So like they're winding, it's getting tighter. Sorry, these are offset for whatever reason. Let me put this back so it doesn't look all weird. So we had bounced. We were coming in here. We talked about this last time. I don't think it was this chart. I probably used a different chart. But this is like the crypto view. It's this area here. I think when we were live and you bought it, it was like, where was it?
57 something.
57s?
Yep.
Somewhere here. It might have been right here. Yeah, this day. The Friday or Thursday.
57.5, something like that, I think.
Anyways, so somewhere in here. Oh, I think you bought this one when we were live.
I think so. I'm pretty sure.
Something like that, which ended up being a decent buy, right? But now, so this is where we are. So we're in this accumulation. I think from here. So zoom out, look left. Let me take some of these lines off. When in doubt, zoom out, right? That's the saying. So this is that last accumulation phase on Bitcoin. And I think so far we've successfully defended it. This setup right now looks like to me like we could go back to 64s. And then I think we would probably fail again, quite frankly. But lock a higher low and continue on into this massive consolidation. You know, it is what it is. But I think that, you know, you start to kind of create this pennant, right? This big, long dated flag, if you will.
Okay.
And that was really like the low end of that consolidation. So,
I mean, Q4 is supposed to be when this thing breaks out. Do you think there's a macro catalyst, or
it's Q4 to Q1, right?
Oh, so now it's Q1. Now we're bringing up.
It's like, always November.
I was told it's November.
It's Thanksgiving.
I was told for Thanksgiving we don't get some turkey, we get some Bitcoin. Now you're telling me for New Year's we might get some Bitcoin.
No, well, New Year's was another one, right? But it could be like the whole thing. So I think generally speaking, look, you're starting to trend up. This is that next shelf right here. So if this, let me make this a little bit cleaner. See, let me take some of these lines off. So I'm just going to look at horizontally, right? So like left to right, not angles or anything. So you can kind of really just get a better view of where buyers are picking up steam and where sellers are sitting, right? So this was this kind of like wick lows, and we were looking at this same exact volume shelf. This was 52s. I always said, hey, look, if we get something crazy, it's still and remains 45s-ish. If there's like an epic sell-off. That may never happen. It honestly may never happen. And that's fine if it doesn't, right? Because that's just me. I'd be in here. But where we go is that you look at where were they defending previously, and you see this, and I'm just going to put a line straight across. So if it was all of this and we didn't have today, we're even further back in time. So you just kind of like zoom out, look left, right? And so you see this is $60,427 and change. And then we can pull it down. We're going to capture some of these wicks down here. And so in this area around 60K, that was the prior support. And then eventually it turned into resistance, right? So support here, pull back, dip, it bounced, and we're going. And now we are testing. Come on. We're right there, right? So this is another one of those where like, it's not the best net new money long spot because it is just testing this level right here. It's going to look like it. And if it does go, we're going to like 63.7s. So we're going right there, 63.775s, give or take. Do we want to be specific? I don't know how specific you want to be, but you're looking at this area
I don't
where
want you to tell me it's going to go up, dude. That's really all. That's it.
Look, you don't sell it here, but you already bought it. You bought a good spot. You should be happy with that buy. I think it was a great buy. I still think you have free cash on the side, but stocks don't just like rocket ship and like good cryptos. Look, you're probably never going to sell it. Never sell your Bitcoin, dude. That's what they
it's
say.
easy to say when someone has an average like you has. Okay. When someone has a little higher of an average, you're thinking of getting out of that sucker.
What about Solana? Did you do Solana? If you want to do like, if there's something,
I haven't looked at Solana in a long time.
Solana's pretty high up there.
Is that 190 or 180?
Now I'll call you. I'll text you. I'll call you if it hits $20 and be like, dude, you buy this now.
I saw it was $10 and my friend started buying it. I didn't know what it was. I just wasn't buying it. It was $9.98, dude, in 2020.
I'm telling you, the one that I think is like the most like potential is Avalanche right here. But
I've heard people talk about this one too.
Yeah, it's not breaking out, but it's in terms of like hyperscale that's currently trading at a discount. I don't know if it like not trading at the highs. Like, this is a good spot.
Okay, so that's what we got with Bitcoin. Do you want to do like two more stocks and then I'll get you out of here?
Sure.
Done.
Hit me.
HIMS.
Ooh.
Nice reversal on that one last week.
I'm finishing my crypto.
Jason's Twitter is in the chat, guys. Please make sure to follow him there. If you want his paid Discord or any of his trading stuff, all of that is in his description.
School is coming back in session soon. We will be. I'll start posting about like the next session of School of Gains.
Yeah. So if you want some real intimate, high level trading stuff with Jason, check out his stuff.
HIMS is
GLP is their core catalyst.
Yeah. Well, like last time we also talked about Pfizer going direct to consumer and Eli Lilly.
Yes. Yeah.
And I think that kind of throws a wrench in some of the HIM stuff, quite frankly. But we're not. Let's just go on the fundies and say, okay, so if this was that, we'll call this the Palantir equivalent of that double top, right? 1555. So we're going to call this, I have different abbreviations as a change of character. So if it's over 1555, the characteristic of this stock is pretty bullish. I'll just say that. So net, you're holding this whole area. This was that consolidation zone. So again, if it's holding in this zone, and I know it's a big zone for a stock, right? So like this is like $3 on a $15 stock. It's a lot of percentages, but you just got to know this is kind of like how these go. If it can lock in a higher low, and I'm going to get real snipey on you here in just a second. So you take this 1450 level, right? Just take this away. So this is top down, I guess, technical analysis. So this was that last gap, one of these last gap ups here. This created a session gap that actually got filled completely, and you wick down slightly right into here. So from a volume profile perspective, we have all of this. I think what I would say is I think this is still in consolidation. But what you can do is if this is the last low right here, really like the low, the real low, and I'm going to delete all of this just for a second, get you a clean chart. The real low. So if this is the last low here, the last low before that low is this 1475. So if you, and that's really like you're still in consolidation. So where's the spot where a higher low can and would show up? It's right in here around that 1475 area, 1475, 1450, give or take. So I think that if you're interested, if you're not already long, that's fine. It's not breaking out yet until you're over 17 right here. But if you should be more into dip buys, and I'll just do a quick. Yeah. So remember I talked about that golden pocket. So there's the golden zone, which is between 618 and 65, or 618 and 50% retracement from this swing low to the swing high. But I like that golden pocket, which is between 6.5 and 618. And then I said the low right before the lowest low, 1475, that lands me right smack in the middle, fills a lot of this like pressure up, like fair value gap, low volume pocket. I like 1475. How's that?
Okay. I like it too. I sold some puts at 30, or not 30, at 13 with TJ.
There you go. Yeah.
I like those as well.
So what I would do, like if I was buying this at 1475 and it was there, I would also look to do something similar when I'm buying stock at the same time. So like, 30 days out, I might be selling some $14 puts while buying the stock at 14, right? Or whatever. Might be selling some $15 puts while buying the stock at 14.50, 14.75.
Right.
So anyways, yeah, I think that's a spot. Does it break out? I think it needs a little bit more rest. And then ideally, what this ends up looking like is you get this, you have that, and then you have that, right? And that's what you want to see. So I would wait, and then you see this, and then you go. If you're a real bull, and that's the setup. So TBD, but it's setting up, not ready to roll, setting up.
Okay. I was going to say one, but we got three in a row.
I'm not doing that.
Out of the way. Micron, AMD, PayPal. Go for it. It's yours.
Oh, Micron, AMD, PayPal, AMD consolidation. PayPal, I thought they were holding a bid on the stock. They kind of did. I thought they were going to hold it at 70. They didn't come back in then, but they did get that retest. So I think that PayPal share buyback is putting a floor in on stock. Where it bounced, I think if I was short, I covered short. Not short now, but oh my God, where this bounced was where you would really want to see it bounce. So I think that was a healthy bounce. If this can consolidate here, I think this is coming up. Technically, dude, I don't like the stock. I don't like the stock at all. I think they can do a lot better with that money. But just because I don't like a stock, unlike Amit, I'm not going to talk smack about the chart. It looks good, right? So I cannot like the stock, but this looks like the absolute consolidation accumulation here, where it held 67.50 is exactly where it needed to hold. I think you stay long, right? Stay long. You could be long. I don't think it's going to get away from you. You don't want this under 65s. Go ahead and stay long, man. I like it. Where it goes, it's got to get over that 73. Got to get over that. And then I think you are potentially looking in the 80s.
I think that's fair. I don't think that's crazy.
Right in here.
I think that's fair.
What was the other one?
Micron and AMD.
Micron, I took long yesterday.
Really?
I mean, we covered it. I almost swung it again just so they have earnings coming at the end of September. I think this is like pre-earnings pop. It was exactly, again, where you want to see it hold. So this setup here is a little bit different, but on a daily scale, we call this like a diamond consolidation. You know, that is, it's setting up. I closed this just because I didn't need it into FOMC. And honestly, I can reopen it later because it's this consolidation, right? Like this is pretty constructive. It's not quite ready to break out. Like I think it could, right? But it held exactly where it needed to hold. I think this is prime put credit spread situation. Absolutely prime put credit spread situation. Even like $90 puts, which are in the money now. But I think this is setting up, right? It's over 90. You're likely ready to roll. And it's this, boom, right there, 91.11, right in that area. So the other day it had like this kind of failed move. So it created this low volume pocket. I think this slowly starts to get filled up into that 91s. And so here, same thing. If this is that consolidation low, what's the low before these lows? It's right, boom, right there. So 87.30s is where this could pull back. I just kind of hit that already. So shit. So okay, 87.75 now, since that 30s was already hit. So it could pull back a little bit, but I don't need this in front of FOMC. I will say that this is a situation where it's ripe for long options. Because Micron has been in consolidation for a while, but with earnings around the corner, you don't want to get like, these are for like short dated stuff. If you buy a bunch of time, IV is a little bit higher just because of earnings. But I think these are ones where you could play with like near dated stuff, especially if you get through this. This is a big move potential, but I think this is, it's about FOMC right now. So maybe not this week, maybe like October monthlies. I see some 95s. It's just got some event volatility built in because of earnings next month. I see a lot of October 90s going out.
They got a nasty downgrade by JP Morgan the other day, like yesterday, but I agree.
Was that not like the worst comment? Like
it was the weirdest.
That's going to go down in history as like the one thing never to say on an earnings call by the CEO. We're sold out until 2025. Like
they're like, fuck you guys. We're selling it.
Hilarious. But yeah, I think still consolidation. It's ripe for selling puts, or maybe some short-term pops for sure. TSM is what I'm interested for. I think you're safer in like it's TSM. Micron is not going to be like whole gamut. It's just HBM. So it's a small piece of the giant puzzle for sure.
Okay. And then last one.
I'm getting DMs. Tonight is the night. Super full harvest eclipse moon.
Oh, fuck that.
What is that?
I used to talk to a girl who cared about all that shit. I hope that means Bitcoin goes up, dude. That's it. I hope that means Bitcoin goes up.
It's possible. Look, man, anything's possible. Dude, Bitcoin's moved like crazy. Do you see this dollar move? So the Dixie is what's kind of like, Dixie. You know Dixie? DXY dollar.
I've seen DXY, but
yeah, we call it the Dixie. DXY.
Interesting.
It like pretty critical level. I don't want to see this bounce too much, but it could bounce. It's kind of putting a little cap on my gold trade, which I had to close
gold
today.
Right now.
Oh, gold at all-time highs, but I think that first press is good. Now we come back and retest support while the dollar kind of pops a little bit.
Okay.
There was another one. What was it? Dude, I thought, so first of all, the Micron downgrade, Micron got a price target upgrade to 100 the other day, right?
Yeah.
Is that the downgrade that you're talking about?
I thought the downgrade was 85 by JP Morgan. They were like memory storage is commoditized. That's what I remember.
It is commoditized. It's commodity.
They're growing. They're growing.
Yeah, but it's a commodity.
I agree.
Yeah, let's not get that. They are, right? It's not like anyways. So I'm not sure what some people are seeing AMD differently. So to me, AMD was a better buy in that 135s if you're going to do it. So long standing, here's the trend. I think is similar-ish to NVIDIA, it's a heavy consolidation. And to me, we're just going to get tighter and tighter and tighter. You know, I think if you want to be a bull, like you really, honestly, you wanted to see AMD hold over this, over 151. 151, I think you really wanted to see AMD hold over it. In the past, we've seen like certain things happen to AMD around this area, right? Like, sorry for my drawing, but you get this little stutter step consolidation, which turns into what the pattern people look to say is like, here's your inverse head and shoulders. But in reality, it's, to me, like the patterns don't matter, right? Like don't care about your patterns. What matters is like how in the past have we seen price react these ways at these levels the same, right? So this is 151. You know, that's what's important, right? 151 here. It's all the way across, right? We've seen it so many times. Here we are one more time at that same level. What's it gonna do, right? So we're at a key pivot, I'd say. Again, it's 148, give or take, is the low end of that volume shelf where, you know, if you get a setup, where is it going to show up? You could get a dip buy. I'm going to take this level right here. So this is that full kind of consolidation. I think this low is locked to me. You can get a dip, right? And so the question is, if you get a dip, the question is twofold. Is it breaking out? No. If you get a dip, where is that dip buy going to be? I think it could be as high as here, right? Like anywhere in that 145 area, you want to see it lock a higher low. And then I think you make a run up to here. I don't know that it breaks out quite yet. You're going to run into this, right? 157s, which would look good. And honestly, if it gets up to 165, I am going to be short. But you know, at somewhere in here, like I'll probably end up being short. And then it's going to look like this. And then I'm going to be heavy long if we get something like that. Does that make sense? So the first breakout's usually a fake breakout. And then you get a pullback retest. And then if we break out through that and we retest and hold this prevailing downtrend, that's going to be ideal. So this is, again, setting up. And at a key level, I think if you're in already, you want to see it hold at least 145, or you want to see it exploding up through 151, which we're not seeing yet. So again, zooming in a little bit more, 151, we want to see price exploding through like we've seen it in the past. So this is 15-minute time frame. That's, you know, when we look back in time around 151, it was a big breakdown. I want to see it, or I want to see it hold, right? And then that lower level is around that 148.75. So that's why in this area between 151 and 148.75, very like zoom in on the microscope. I don't want to see a fail. This is what it looks like failing at 151 here, right? That's what it looks like here. So what we want to see, if you're bullish, you want to see this type of price reaction. Does that make sense? Like if you see a red open that boom instantly starts reversing, and like a day like this, okay, you're likely going. If you see a day like this where you have a red open and it fails to get down below 148.75 and it closes on the highs, that day you probably want to open net new, like that day. And then that day would look exactly like this, which is what would happen. But until then, right? So open here, close over there. I just don't want to. I don't want to get in front of AMD at a level where we know in the past it's had a heavy reaction, and may or may not like be the explosive move. So I think better looking around that 148 area to see how price reacts, especially if we get a red open that closes green or is quickly bought up.
Right. I think that's fair, and you've been pretty consistent on that for the past couple of months now when it comes to AMD. So, all right, there you go, folks. That's what we got. Got, I think, about 20 tickers through. So we got through a lot of stuff.
We got a lot, man, for sure.
You guys have a lot to dive through if you're catching up on this after the live. Jason's Twitter in the chat. You can check him out. Is avocado something big for you, Jason?
No, dude. That's the Spaces crew. That's Emph. What's up, Emph? Like, whenever I like on Spaces and I start a stream, I think it was Jordan Ace, like Jordy, like he's like just going. Anyways, and so sometimes I get the what do you call that when they start like
spamming you?
Yeah.
Oh, there you go.
What is it? Oh, so they're lunar. What are they saying? NASA awarded
$5 billion from NASA or some shit.
Okay.
That'll get you up 40% after hours. You get $5 billion as a small cap. Yeah.
True story. Did we do Dell?
We didn't.
You don't like Dell.
I mean, their operating margins. It's not what I like. Their operating margins suck. That's why.
What?
Dude, it's better. Zero. Do you know they didn't even? Did you listen to the earnings call? They were dicks on the earnings calls.
Dude. Okay, Michael's been selling. I know. Sold another like 400 something million. But technically, it's happening. It's happening.
I'm not bearish, Dell. I'm just saying they have plenty of demand. They need to get profitable on the demand. Like servers are not a fun business. It's not like an
but like Dell is like one of those companies. It's so big. Honestly, like they have so many business units that like net. They could do. This is one weird story where the sum of the parts is definitely greater than the whole in Dell, but the market really doesn't know that. They have no idea how many business unit Dell has.
No, I agree with that.
It's massive. But anyways.
All right, there you go. Jason, if you guys want more stuff from Jason, his Discord is in Twitter. You can check it out.
Appreciate you, man. It's been fun.
Trading Discords. I'm in it. I get his ideas every day.
Did you just say you're in it? I've yet to tag you because I haven't told anybody that you're actually sleeping in there. He's lurking. He said nothing, but he is there. He gave himself up. There he is.
Yep, you can tag me in it. I to be honest, dude, it's like I'm doing a lot of shit throughout the day, but when I get a chance to just like look at some of the shit there, it's good stuff. It's a great collaboration, good ideas.
Yeah,
so it's not too bad. All right, I'll be back on the Market Open 8:45 tomorrow. We've got a big day, folks. I'll be streaming starting 1:30 with this Fed FOMC stuff. We'll see what happens. I'll have a video coming out in a couple of in like 30 minutes with some Palantir employee interviews. And then tomorrow, Jason.
Oh, I'm looking forward to that one, man.
Question.
What's that? No, I was saying I was looking forward to that. When are you gonna do it? You're gonna
like 20 minutes. I'll upload it, so you'll see.
Oh, nice. I've been waiting. So where are these interviews?
It's two amazing employees. It's awesome.
Awesome. Cool.
25 or 50.
What? Oh, 25. The question is really, do we go up or do we go down? Regardless. Because I'm not actually convinced that it matters what the rate cut, what happens, right? Like, do we just go down or do we just go up?
I don't want to say we get 50, but I think you're right.
Dude, I don't see a problem with 50.
I don't see a problem either. That's why I think Jay Powell, someone's whispering to him tonight, like, yo, just fucking do 50. Labor market, cool.
Just rip it off, get it going. Yeah, I don't think it matters, right? I don't think it matters. It's just that, like, maybe the market, so clearly the market's is hoping for 50. They get 25, we get a little pullback, and we keep going. And we end up a week from today. Amit and I are talking S&P all-time highs. Even if we get a dip,
triple top, right?
Just saying, all-time highs are not bearish, man. Not historically.
All right. That's it for us. We'll see you guys tomorrow, 8:45 in the morning. Big day. Thank you, everybody, for joining, for spending your time with us. It means the world. We'll see you guys on the next one.
Adios.
Bye, everyone. Have a good one.